your lips on mine. Stop, sweet. Tender rock, baby.
Good morning, investors. Welcome to the EasyEquities Investor Conference.
Welcome.
I think this is like the biggest investing conference in the whole of South Africa ever. I want to say the world.
Don't say the world yet. We're about to go there.
Okay, we're going global. We all know that. We all know that. Guys, there's so much to look forward to today. We are so excited. We've been up like early this morning. I had a triple espresso, so I'm going to be talking a lot, but not as much as some of the very exciting guests we have today.
Definitely. And I hear we're taking it from Ireland all the way to the Olympics and all the way back round.
Yeah.
So it's going to be insane, guys. Like Carly told you, she took 3 espressos. 3. So she will be chatting a lot. So the reason why you asked, like, our background might be a bit funny, but we're actually in the EasyEquities office right now.
In the hub of Joburg, where it's all happening. We're in it, guys, we're in it. So what are you most looking forward to today? I've got my favorites, I've got my picks. I'm sure you guys do as well, but what are you looking forward to, Les?
I think I'm looking forward to the CEOs. I hear we've got some big CEOs on the agenda, so that's going to be sick. I'm looking forward to that. I think definitely probably Charles.
Yeah.
Nah, let's go with Capitec CEO.
But guys, just think about it. These are CEOs of JSE listed companies that have given up their Saturday to hang out with you. I mean, that's pretty amazing. That's taking access to a whole other level, I think.
Yeah, and that's what we do at Easy Access. That's the name of the game. We want to give everyone access to the JSE, to the big CEOs, the people that you'd never ever see, but we'll bring them to your screens.
I know you're a bit of a crypto freak, and we are going to be talking about crypto a bit later. And I'm sure we've got some crypto fans in the house. I'm yet to be converted, but today could be my day.
Hey guys, I think Carly's about to step off here because I'm a huge EasyCrypto fan. I love the EC10 bundle. Yes. So that's me. Carly, please start investing. That's my financial advice, by the way.
I'll think about it. I'm going to see what our VP of Finance has to say a bit later, and maybe I'll be convinced. But guys, we're also going to be talking about some stuff to really help you guys, because it's about you, right? So we're going to be answering some of your biggest questions, like how do I start investing? Like, what shares should I invest in? How do I do this research that you keep telling me to do? So we're going to do a bit of a deep dive into that stuff. And we're also going to be looking at stuff like how to protect yourself, because there's a lot of weird folk out there on the internet. Am I right?
Scammers are working overtime like always, but we got the big dog Sash coming through, Legal Eagle. She's going to break it down for everyone to make sure they know what to look out for.
This is someone you don't want to mess with, okay? You're going to have to listen to everything she says, because everything she says is right, and we're here to have your guys back. So yes, definitely stick around. There's lots of stuff happening today, and my favorite part of today, to be honest, is the stories. I'm all about the stories, guys. We're going to hear stories from other people just like you, and a few more. And I'm going to put you on the spot, Lesedi.
I was going to put you on the spot.
No, I'm going first. I'm always first. Tell us about your own investing journey. Like, how did it start for you? When did your interest peak? What was your first share? I want to hear it all. Don't you guys? I'm sure you do. You've got fans. They want to know.
I hope I have fans. My investing story is so boring. So my background is investing. So undergrad, went to UJ, did a BCom finance. Then I did my honors in investment management. So it's so boring. So I've always known this space and this.
It's not boring to me.
Oh,
you can tell me anything.
Guys, these are the people you need in your life. Emotional support. Anyway, so very boring, but did my honors in investment management. And then I realized that there's money to be made. And that's all.
Cha-ching.
And I decided to start investing. And luckily there was EasyEquities. And then I think 2 months after I found EasyEquities online, I started working here. So brands aligned.
Stars lined up for you.
Right?
Guys, mine was way more emotional. Let's get into it. Let's get into my journey. I mean, for the 5 of you out there that probably haven't heard it yet, I actually started investing because my dad gave me a 50 Rand EasyEquities voucher for Christmas. Long time ago. I was really hoping for a voucher like for Gucci or something like that, but he gave me this EasyEquities voucher. I was like, okay, what is this? And he said, if you just start with this 50 Rand, and I was like, please, no one can invest with 50 Rand. I don't know what you're talking about. There's more in it for you. I'll give you the rest of your Christmas money if you just use this 50 Rand. So it took me a bit of
At least you didn't
time.
get cold. You know, you're a good girl.
Sure.
You got a 50 Rand
If I got
voucher.
coal, we'd be having all other kinds of conversations right
Exactly.
now.
The gift that keeps growing.
Exactly.
That's what he did for you.
So he did that. Anyway, I went onto the EasyEquities website. I watched a few videos and I was like, okay, can't believe I'm doing this. And I made my first investment and it changed my life, man. It totally changed my life. The warm and fuzzy part for me was just feeling like I can actually do this. I was in my early 30s. I had no plan for retirement. I have no background, unlike you, with all the financial smarts. I don't come from a financial background whatsoever. I was going to be Beyonce. Basically,
And I've heard you sing before.
I missed my calling. I was going to give her a run for her money, but I didn't, luckily, so I can be here with you today. But my first investment was into Pick and Pay, actually, 10 Rand. 10 Rand into Pick and Pay. And just the feeling of making that very first step changed my life. It changed the way I think about my money. It changed the way I think about my future. It changed the way I think about brands, actually.
Okay.
Because now when I'm in Pick and Pay, I see myself as a shareholder. I'm quite happy to stand in a queue because I can see all these customers are making money for me.
I love it. Love it.
What are your favorite brands?
Favorite brands? Let's go with Purple Group.
Obvious.
Then number 2, I am loving. Am I loving after that? I'm so biased. I'm an ETF person, actually.
Okay.
So
I like my ETFs.
Yeah, I'm a more fourth industrial revolution kind of guy, a NASDAQ guy. So I'm there in the tech companies, you know. That's where I'm looking at. And a lot of crypto. So I'm very aggressive, by the way.
Okay, so high risk profile, but then you've got your ETFs to kind of like balance it out.
Yeah.
I go super vanilla with my ETFs. So I have my like personal favorite shares, Purple Group's in there as well, obviously, and Capitec, because guys, have you seen that share price lately? Hello. But then I have in my tax-free savings account, I have my ETFs, and I'm a Satrix MSCI World gal and a Satrix Top 40. And then I have a few other little masalas in the mix there as well. But of course, shares, bit of Signia, got a few others, but Satrix my main squeeze.
I'm very Satrix. Those people are my
strong.
Yeah.
So guys, I mean, like we said in the beginning, this is probably one of the biggest, well, the biggest investments online conference. And while you watch us today and while you join all these sessions, I want to just have a little plug into some of the other awesome resources that we have for you guys on EasyEquities, not to distract you, but just to let you know that in your investing journey, you've always got tools and information at your fingertips. What are some of the sort of platforms and resources that we have for everyone?
Okay, so when you're a newbie and you just started out and you just got EasyEquities, if you go to the platform, there's something called Easy Academy, which is just click on the icon at the top. It's like a
profile menu.
Yeah, the profile menu. Click on that, click on Easy Academy, and then log in. That teaches you from platform to the jargon that people use out there.
What are penny stocks? What is liquidity?
Exactly.
How do I use recurring investments? All of that kind of stuff.
So we break it down super easy for you guys. And then once you're done there and you've graduated from Easy Academy, you can head to our Easy Research.
Oh, there's some good stuff there. Actually, one of our recent notes on our research portal is actually about psychedelics and marijuana stocks. I mean, guys, you have to check this stuff out. It's so interesting. Yeah.
So we got, once you graduated, Easy Research. If you want to do a bit more reading, you can go to the EasyEquities blog portal, which has amazing content there as well. And then once you're done there,
YouTube.
Come
on. Like,
I was about to plug the podcast.
Okay. Podcast first. Yeah. Go for it.
So then you can go over to the podcast when you're driving, trying to lay back, you know, showering, want to listen to something, just put on the podcast. Just press play, investors. Press play.
Easy does it.
We got DJ at large on it. He's killing it. And we're loving the feedback that you guys are giving us. So we'll keep more content coming. And then we finally have
YouTube. Go to our YouTube channel, guys. From like all the webinars we do to some basic 101 education. There's a playlist actually called Easy Learn, where you can go from concepts like diversification, to what is an ETF, to which share should I buy. It's all there. So whatever your flavor is, there's something for you. Now, guys, today we had people knocking on the door to be in this conference. Warren Buffett phoned me. He was like, Carly, can I come join you? I checked the schedule. I was like, oh, sorry, we've already got the most important guy in the investing community as our headline act. I mean,
oh yeah,
anyone come to mind for you?
I don't want to say his name. His head might get bigger. But you all know him.
Yes.
He's the founder. He's the CEO.
He's the man. He conceptualized this business while sitting on a beach in Mozambique. I mean, what? Mind-blowing. So we're going to hand over to you guys to our CEO, the one and only Charles Savage, and he's going to be talking some interesting data, some juicy bits and pieces about Purple Group and EasyEquities. So yeah, I'm going to hand over to you, Charles.
How's it, everyone? How's it, everyone? And welcome to the Investor Conference. Thanks, Carly. Thanks, Lesedi. Nice intro. And Gerrie, thank you very much for joining us. It's such a privilege and so lucky to have you on. Thanks for taking time out on your Saturday. I'm sure there were 100 other things that you could have done, but thanks for joining us.
Pleasure.
I thought we'd use the opportunity to kind of share our two stories together. A lot of people have compared the two businesses. A lot of people are saying that EasyEquities is the next Capitec, and I don't think there's a higher accolade in the world to be compared to Capitec. So I'm going to start by asking you a question, Gerrie. What's the magic in Capitec that's seen this incredible bank emerge over the last decade and a half? If you had to sort of summarize the magic, what would it be?
Charles, yeah, it's an interesting question, but I think the first thing is really focusing on the client and really understanding the client. If I take the amount of time I've spent going through all the towns in South Africa, there's not a town that I don't know, that I haven't walked. I know exactly where all our branches is. So it's that passion for the client and really understanding the client. Then it's a question of sticking to your fundamentals. Our fundamentals is affordability, accessibility, simplicity, and service. And I think then the most important thing is that ability to execute, because a lot of people talk about strategies and has got these grand ideas, but how do you focus and say yes, 2 or 3 things, and you're really doing it well? So I think the one thing we've done well over time is really execute on a couple of things and really doing it well. So I think that's actually where the magic lies.
Yeah, I mean, I've seen that firsthand. I mean, I remember when we partnered for the first time, and my first takeaway from that engagement was how razor focused you are on the retail customer. I mean, really understanding their needs, their wants, their desires, and then focusing your execution on delivering those. So yeah, I get it. I mean, I was just looking back at yeah, sorry.
No, it's probably the most difficult thing in if you manage is to say no, because it's so very easy to say yes and say yes to everything, but to really say yes, there are 1 or 2 things, and we're really going to do it, and the rest you say no for. I think that's the biggest challenge in life, is that ability to just say no, we're not going to do that. Yeah,
and we're at that point where there's so many things we could do, but it's choosing the ones to say no to that is like strategically more important, and then focusing on the right ones. And you never get it right all the time. I was looking back at our journey, and we're 7 years old, so we're quite a lot younger than Capitec. But we got to our first 1 million customers now in this financial year. So just 6 years after we started our business. And I was looking back at the numbers and sort of kind of trying to get some context, because you get complacent with the numbers. I mean, in our first year of business, we opened up 11,000 accounts. Today, we open up 11,000 accounts in 3 days. Yeah. Do you remember how long it took you to get to your first 1 million customers?
Well, I know, in 2000, we spent about 6 to 8 months writing our business plan. And it's a very good discipline to actually go down and actually say, what do you want to do? And I still got that business plan in my drawer, and we've actually delivered 99% on that business plan. I always joke and said the one thing we got wrong is the number of clients. Because in that business plan, it was 2 million. And I know we've reached 2 million. I think it was in 2005. And then Rian went to and say we should go for 5 million. And I thought, that's crazy. Yeah, and today, we probably now at 16 and a half, and still growing with 150,000 clients per month. So I think it's not about focusing on the number of clients. It's actually what value do you add to those clients, and how do you optimize that client experience. So that's where our focus is. It's actually not the number of clients. It's actually how do you make certain that you deliver on those needs, and that they really understand the product and understand what they're doing. Because I think that's the biggest challenge in life, is that your product range must be so simplistic that people really understand it end to end. Because then you create magic.
Yeah, it's such a great insight, because reflecting on that million, it took us over 6 years. The next million will come in 18 months for us. Yeah. And you can get kind of lost in the numbers. The real magic, though, as you say, is what are you doing with that million that's arriving? How are they converting? What products are they consuming? Do they understand what they're doing? And one of the big insights that have come out of our relationship in the last year is that the thing that we need to do better is actually education. We need to spend much more time educating our consumer base. And I think that's something that we share. I think, I've seen what you guys have been doing in the education space, and it's been phenomenal.
Yeah, I think that's the challenge. Even if I look at where we're going now, we've got now 9 million clients that's on digital. The problem with digital is that client is not coming into your branch anymore. He's actually out there. Now, how do you engage with that client? How do you make certain that he's understand your products and he really is aware of all your products? And then it's also about when he is in that branch, how do you create magic? How do you make certain that your consultant connect with that client and that he understands? You don't go out there and only sell one product to him. It's actually more about selling or understanding global one. All our products is combined in the global one. It's making certain that the client understands it, because when he understands it, then you get that powerful other side, and that's that word of mouth. Because that client is then your biggest brand ambassador. So that is what you need to aim for in life, making certain that, in our case, our 60 million clients is all brand ambassadors, and they talk about the brand. Yeah,
when we talk about brand ambassadors, we talk about shareholders. And that, I think, has been one of the magic things that have come out of EasyEquities, is that we've been able to convert consumers of brands that they're in love with into shareholders. And I was looking at your data. I mean, you've got 80,000 shareholders on EasyEquities that have been built up over the last 6 years. That makes you you're ranked number 3. You're only behind Sasol at number 1, and then EC10, which is the crypto product. And then it's you guys at 3. And then I've snuck in behind you at number 4. But these are big numbers. I mean, you've got, if you like, 80,000 soldiers out there that are brand advocates, that are out there building your business. That have converted from falling in love with your retail brand and what you're doing into falling in love with the share and the share price.
Yeah, it's one of those things people always ask me about, the share price. And it's an interesting thing. We will never discuss it at a management meeting or exco meeting, or it's hardly ever been talked about in the business. And I'm talking that's the last 20 years. It's been the case. It's more about the fundamentals and the input. If you're focusing in life on the output, you're not going to be successful. You need to focus on the input, because the input generates the output. So all our attention in exco meetings, etc., is about the client. What do we need to execute? The profits and the share price, that's the output. So our focus is actually really on the fundamentals, and I think that's also made us successful.
Yeah. I having worked with your team now for over a year, I mean, one thing that blew me away, firstly, how hands-on your executive team on, like, it's just crazy. For a business your size, you're a very flat organizational structure, and even yourself, you were right in the decision-making and implementation. And then the other thing that struck me was, which is again something that we share in common as a business, is just the culture of the team, how excited they are to get up and make a difference in their customers' lives. I mean, they don't just say it, they eat it, breathe it, sleep it, they get excited about it. And there's an energy in Capitec that I haven't felt inside any other large institution in South Africa. And I think in our case, we've got it with 120 staff, and I'm very proud about it. But how do you keep that culture so strong when you've got so many staff?
Well, it's interesting is that we only about 4 years ago really asked ourselves, what is our culture? And it took us about an hour to just summarize it, because our culture was summarized in client, our people, our staff, and the ability to deliver. So that's basically our culture. But we also, about 7-8 years ago, when I took over as CEO, we challenged ourselves on this whole concept of you're going to become big, and if you're big, you've got a culture of a big company, and we don't want to be there. We want a culture of small, nimble, fast. And then I said, I don't want to be the only CEO. I want every single person to operate as if it is his own business, because that is when you're successful. If every single person treats his function or his job as he is the CEO of that job. So we're driving the CEO principle very hard in the company, and the CEO, the C stands for client, the E stands for energy, and the O is ownership. So we drive that very hard in the company, that everyone is a CEO, everyone needs to be accountable, everyone needs to make decisions. And I think that's that passion that actually what you're observing. But it's something you need to work on continuously, especially, we're now close to 16,000 people. So it's a challenge to make certain that, especially new people that's coming on board, how do we make certain that they understand the Capitec culture and live up to it?
Especially in COVID. I mean, this world where we engage like we are now, it allows us to connect easily, so you can join something like this, but it's hard to, I think, to communicate culture through a digital channel. So it must get tougher.
Yeah, I think that's the biggest challenge for management, and I'm not talking Capitec, I'm talking right across the world, is how do you balance a work, because I think it's gone that you will work 100% from office. It will be a balance between office and work. And then how do you create that culture and engagement? Because it's fine to sit down and execute something, then that you can do at home. But if you talk about culture, if you talk about coaching, developing people, growing people, brainstorming, you need to be together. And I think that's where we're spending quite a lot of time on it, is to say, how do we get that right? But I think, that is probably the companies that get that magic right is going to be the winning companies going forward.
Yeah. So talking about our partnership, and I love the story. I love telling the story because you phoned us, it was December, and I remember Francois phoned me, and I was about to go to Mozambique, and he phoned me. He got hold of me via a whole lot of channels. Anyway, he eventually got hold of me, and he said, "Listen, we're building this Live Better proposition inside our new banking app, where we're going to enable other partners to have access to our distribution. And would you like to be the first?" And I thought, I had to check my calendar to see if it wasn't April Fool's. And I was like, yes, we'd love to be your first. And then he said, well, that's cool. I'll phone you in January. So he ruined my whole holiday, because I had to spend the whole of December and January wondering whether we were going to partner. And then I've never, honestly, people ask me, how did we do the deal with Capitec? And I wish we could take credit, because we can't. You and your team approached us and you did the deal. What was it that stood out for you? Why was it something that you wanted to do?
Well, it's if you look at where we're going, is we've got quite a lot of things that we believe we have to do ourselves, but then there's other things that we say it's not our forte, and that's our partnerships with SA Home Loans, Sanlam, and yourself, and we believe that's the winning recipe going forward, is to say, do what you do that well, and where you've got other expertise, bring that on board, and partner with people. So we wanted to create a equity trading platform for our clients, but it's not our focus, and it's not our strength. And you guys stood out. You were doing it completely different. Your approach was different, so it fitted in with the way we're looking at it. Because we're always looking and challenging and say, how do you do it at least 30% better than your opposition? Because then you stand out, and you fitted that mold exactly. So, and I think we will continue going forward and look at partnerships to optimize.
Yeah, I mean, I think the future of banking is going to be one in partnership. I think you know, the world's moving so fast today that you can't expect a single institution, I don't care how big they are, to do everything. I think partnerships are going to be a key enabler. One of the kind of themes over the last, and I guess the theme that Capitec, the wave Capitec rode in on, one of them was costs around banking. And, you know, we shared that kind of theme. You know, a lot of focus on costs and making it cheaper and easier. In our business, for me, it's never been about cost. It's about making it easy. And part about making it easy is making it frictionless. And part of the friction points is obviously costs. But the banking landscape, since you guys have grown up, has changed radically. I mean, you've now got, you know, Zero Bank launched the other day. You've got Time, you've got Discovery. You've got a lot more digital banks that are now competing for your bread and butter. How do you stay looking forward? How do you stay relevant? How do you hold off the competition? What's the kind of edge that keeps that Capitec business growing at the rate it has?
Well, you know, there's a lot of competition coming in, and everyone is on digital. But what people tend to forget is we've been on digital for the last 9 years, and we're sitting with 9 million clients on digital. So we've already made a big switch of clients, and especially now the last 2 years, we've added about 2 to 3 million clients on digital. We've acquired Mercantile business banking, and we're building their complete digital business banking offer, which we'll probably launch middle of next year. So our focus is very strong digital. So I think if you look at what we're doing, it's all, how do we actually make it easy for the client? The complexity must lie with ourselves. And how do you add value, your products? And I think one of your strengths that we've got is that 60 million clients. Because think about how you can actually create value for that 60 million clients, and then also for businesses. If you put all of that together, that you can create something special.
Yeah, I mean, just bringing that back to EasyEquities, when I think about sort of growth over the next decade, because I don't like to think short term. I've never predicted anything right in my life, so I try and steer clear from it. But there's sort of two areas that I think as our business can grow. One is I think we can deliver more products and services to South Africans. And, you know, we've done that most recently with EasyProperties, which has been a phenomenal success. I mean, that business on our rails, 114,000 registrations, 35,000 customers in its first year. It took EasyEquities 3 years to get there. So that just shows you can get product right. So we'll do more of that in the future. And I'm really excited about the kind of products we can do. The second one is, you know, we're thinking about the South African success we've had. Can we create it somewhere else? And I know you guys have tried and you've made acquisitions elsewhere. You know, we're desperate to go and make a difference in Africa and other emerging markets. You know, I think for us, that's our next big test. What are you guys thinking about in terms of Africa and international, or are you just thinking here at home?
Yeah, we've bought a company, an online lending business, Cream Finance, about 4 years ago. They're operating in 6 countries. We've decided you rather go small, but learn and understand what's happening, because we've seen a lot of South African big companies that's gone abroad and has burned their fingers. And I'm glad we've done it, because we're learning quite a lot on how different the market is. Just to give you an indication, how different the market is between Mexico, Poland, and Spain. It's completely different. And then the second point that's very critical is to understand the regulatory risk, because the regulators in these countries are also completely different, and they've got completely different focus areas. So I think one needs to understand that better, and then you need to make certain that you take your best people abroad when you go. So what is important is we've set ourselves, we want to build business banking and retail and optimize that. And then let's say 5-6 years from now, one will look at taking a digital offer out. But when you do that, we now already start developing our best people so that we can take those people and say, okay, you go into those particular new markets.
Yeah, and I mean, it's interesting how banking is. Gerrie's gone. Are you still there, Gerrie? Sorry.
Yeah.
It's interesting who's becoming banks today. I mean, I don't know if you've been following Cash in the US, but they started off as just a payment gateway, and now they're doing investing and transactional service. And it's almost like it started off by being very focused in a vertical, but now everyone's scaling horizontally. And the next big bank could come from anywhere. Where do you think your biggest competitive threat is going to come from? I mean, you guys you've got a big moat on the competition, but if you had to say, where do you think it's going to come from? Where do you think the big competitive threat comes from?
Yeah, I think, everyone talks about Bank Zero and Time, etc. But for me, the biggest threat actually comes from the big players, and that's the Apple Pay, Samsung Pays, Alibaba's, those companies, because they've got the power. And if you look at Alibaba and Tencent, what they have done actually already in China. I spent 3 weeks in China in 2019 when we could still travel. And it's exactly what you said. They start with payments, and from payments, they understand the pattern of the client, they understand the client better. Then they go into lending, and then they go into the deposit side. And when you see again, they're actually a bank. And I think that's a very big threat, and we need to understand it. I think that's where the regulators must play a very careful role, because you need to make certain that the playing field between banks and the new players are equal. But that's also where we're spending a tremendous amount of time on payments, because I think the most important thing is, from payments you see a lot of patterns. You can apply a lot of machine learning to understand the client better. So if you can have the payment history plus you've got the client's banking account, that's when you can optimize a client. I think that's where banks will always still have an advantage, because they've got that trust factor and they've got the banking details of the client.
We've spent a lot of time opening up access to our platform capability. I mean, that's how you guys integrated. It was all through APIs and open access. And I think for us, that's how we defend and actually enable the competitive landscape. I had a very short or brief insight into your open banking landscape, which looks very cool. Do you think that's going to play a big role in the future growth of Capitec?
Yeah, I think it will, because if you look at where the world is going, is to share data, and the client, ultimately the client owns the data, and it's how do you actually create value for that client. So I think the whole open APIs will play a role, and I think the client. The ultimate test is going to be, if you add value to the client will allow you to use his data and share it. I think the interesting debate and we had that debate on Thursday, is with APIs, it's like, we spend a fortune on acquiring the client and getting all his data, and you just share it. I think that's where the debate is, because you don't want to sell a client's data on, and that will be against our principle. But you have spent quite a lot to get to understand that client, and do you just share it openly? I think that's where big debate is currently taking place in the world.
Yeah. I was just looking at a metric that I keep track of, and I was wondering whether you guys have done a similar one. In the period that we've been around, we've saved our investors R1 billion in transaction fees, when compared to our nearest competitor. And when you compound that out, I mean, the numbers get crazy. I mean, at 30 years, that's 64 billion. And then at 40 years, that turns into 256 billion. And if you think about the economic impact that that's creating in the country, just saving people money, forget about the fact that they're saving and investing. You guys have fundamentally changed the game. I mean, you were the first on low-cost banking, and the economic impact of that. Have you ever tried to quantify it and the impact that you're having in growing the economy and enabling financial services?
Yeah, I think we used to do that some, so I haven't done it for quite a while. I think the one that we still highlight, because it's let me just explain it. It's very difficult because there's so many different banking products out there, and to explain how our fee structure works and then to try and work out a sum is very, very difficult. I think what we have done is changed the cost of banking or what the client is paying. We've actually gone in and our position has lowered their pricing considerably to create value for the client. The one area we're still creating a lot of value is the majority of banks on your retail transaction account, you get zero interest. So if you've got money in, you got zero. In our case, we're still paying 2.25%. Before the repo rate was dropped over 3%, that was 5%. So, and I know that figure is in the region of about 4 to 5 billion a year that we're actually saving our clients just by that money that he's got on his transactional account, he is actually earning interest on it, and not like other banks where they basically get zero interest.
Yeah, I mean, it amazes me that banks still don't give you interest on your money. I mean, it's your money. Last question from me, and then we wrap it up. And it's a really selfish question: is if you had one word of advice for me at EasyEquities, given where we are, the life stage that we're at, and you've been through this, you've done it all, what would your advice be to me?
I think there's two things for me that will stand out. It's focus and execution. I'll touch on it right in the beginnings. So even, we had an exco on Thursday, and I spoke a lot again about focus, doing less, but doing it well, because it's so bloody easy to say yes for everything, but really focus and really execute on a strategy. Because if you look at the magic of executing, it goes about that simple thing that all your people in the organization understand the why, because if you understand the why, then people deliver on what needs to be done. So it's those two words, it's focus and execution for me, which is very important.
Lekker, man. Thanks so much for coming on. Oh,
Before you go, I have to interrupt. I'm sorry, Gerrie, I'm a huge fan. Huge fan, big admirer of yours. I had to come and jump in and steal some of the session with you. I just wanted to say I've been working closely with Capitec in this last year, and I honestly just feel what makes your brand magic is your people. I have to give a shout out to my girl, Carrie-Anne Singh and Eric Viljoen and all the guys that I've been dealing with in the last year. Francois, you're getting me, just the most important face.
Thanks a lot. I think if you look at just your question now, Charles, people is your most important asset, because if you want to execute, you execute through your people.
Yeah.
So they create the magic.
Lekker, Gerrie, I really appreciate you taking the time. I'm sure your investors loved it. Look forward to catching up soon. And as always, thanks for your support. It's been amazing.
Thanks a lot.
Thanks.
Bye.
Cheers, guys.
Hey guys, you're back with us again. Obviously the stars of the show.
Obviously. Without a doubt.
But I think it's just so amazing to hear from heavyweights like Charles and Gerrie. I mean, yeah, I had to jump in and steal the last bit because, like I said, I'm a huge fan.
Yeah, guys, we're both huge fans. She beat me at Ching Chong Chat, so she got to come up. So,
there we go.
Yeah.
There we go. Now, guys, today is about EasyEquities, but we've also got amazing partners on board. Financial Mail. If you guys are not reading up and doing the things, you are missing out. This is a publication that's making waves. It's changing my life. Like my smarts have just exponentially grown. Not that they needed to, but yeah, exactly. So yeah, guys, check out Financial Mail. We're going to be hearing from some of their editors and their journo heavyweights later today, so stick around for that. But we've got a very interesting speaker up next, actually. Before we do that, I'm going to give you guys an exclusive tour of our office. Should we do that?
Yeah, let's do it.
Okay, so this is where all the magic happens. This is EasyEquities HQ. So as you can see, not many people in the office today, but about 2 years ago, it was a hub of activity. Let me show you where I sit, where the real magic happens. Come with me. So this is where me and the brand team make magic. We come up with all those awesome campaigns, prizes, education. We make it all happen for you guys and with you guys, because you're a big part of it. And now I want to show you our super, super fancy setup that you're going to be privy to in just a bit. Come take a look. So we don't do things in small measures. And I had to specifically not wear my favorite green dress today, and you'll see why. This is the set. This is it. This is what it looks like. So your investor conference is nothing short of 5 stars. But we had to give you a little bit of behind the scenes because that's where it all happens. Okay, guys. So should we take a little step on here, see what it feels like in the limelight?
I've been waiting.
Okay, let's do this. Yeah, I think this suits me.
Yeah, I think I'm glowing now.
This lighting is doing things for me.
That's us.
Yes. Ooh, speaking of stars, though, our next speaker is a bit of a Twitter star.
Yeah, and his name makes me laugh every single time I see it. I think it's the emoji after his name. It's the eggplant.
Oh, wow. Okay.
Yeah. So anyway, up next, we've got
Bright Khumalo. You guys might have seen him on Twitter. He's going to be talking all about how to start investing. He's actually got such an interesting story himself.
Oh, really?
Yeah, so Bright is an analyst and a portfolio manager at Investec. And after the session, I think you guys should also really go check out our Easy Learn YouTube playlist because it's got all of those fundamental bits and pieces that I really think you could gain a lot from. So stick around. We're going to be doing fancy things with the set in just a bit. But Bright, we're going to hand over to you.
Thank you very much, guys, for having me in the investor conference. For those who don't know me, my name is Bright Khumalo, the dividend puppy. I think the emoji they're referring to is the the brinjal emoji. That's after my name. So yeah, it's the brinjal and the water emoji. Just for continuity, if you're watching at home and you see that you're not sleeping, can you drop the brinjal emoji, the water emoji, the Twitter emoji right now on the chat so I know it's real? Unfortunately, I couldn't make it to, that fancy office of theirs. So I decided to go with the Vines this time because they were closer to home. It's pretty cool. Yeah, so without any further ado, so I was actually asked or tasked to talk about, where to start your investment journey, which is a very hard question if you want to think about it. And if I just, came here and spoke about it the way it is, it would sound mostly like, I don't know, a how-to video. So to make it a little bit more fun, I decided to just put the question, upside down and actually talk about my journey of how I actually, went from zero to becoming a portfolio manager or discovering investments, in the process. So I think it'll be more fun that way, and there'll be more anecdotes that I could share and stories with you guys. And obviously towards the end, and maybe share a bit of lessons or how to, get your own investment journey kickstarted. So without any further, hey, I like those emojis. Without any further ado, let's jump straight into it. For those who don't know, I was born in a little village of Escort called Kwavala. This was many moons ago. Right now, everyone knows that Drakensberg, as a snowy Drakensberg, which is, halfway through Lesotho, halfway through KZN. I was born in the KZN side of things. In terms of schooling, my schooling was quite, is colorful. I won't go too much into that because most of it was in KZN, half of it was in KZN, half of it was here in Gauteng. And then obviously in university, I went to UCT. But the most, I think, important thing I want to mention in my upbringing is the fact that when I grew up and I would, have birthdays, I was staying with my grandma at the time. She taught me the importance of saving. And in any investment journey, saving is very important because everything starts with capital. So I think that being instilled from such a young age in my life played a very critical role of where I ended up. Well, I think it played a very critical role. So now I knew the importance of saving because I think at the time everyone was so obsessed about the new millennial coming up in the 2000. The songs were about that. Everything was just surrounded about that. I actually opened a Mzansi account, which was the big World Cup 2010 account that you could open with. I think it was the post office at the time. So I had saved all of my birthday savings, moved them across to my Mzansi account. While still living and having fun, as a young individual at the time. So I think my interest, or what sparked my interest in investing, is when I discovered a few movies actually when I was in high school. I think it's because around the time, it was 2006, 2007, TV was playing a lot of finance movies because a lot of people were making money in the stock market before, obviously, the 2008 crash. And some of the movie that caught my attention, it was Wall Street, the one with Gordon Gekko, the original one, 1987. Obviously, the one that followed that one, which was Money Never Sleeps. And since then, I wanted to see more and more of these movies. So I was introduced to Rogue Trader, which I thought was a bit boring. And then there was Trading Places, there was Boiler Room, which was totally insane. So maybe you could write that down for yourself and go check out those movies. And eventually I said, you know what? I actually want to have a career in this little thing called investing, even though at the time I didn't know what it meant, what it entailed. But I knew that, I wanted to be somehow involved in the investment process and obviously take my people with, because I didn't grow up in a very rich family. I didn't grow up in a poor family either, but I wanted to basically introduce investing to the broader community that I grew up in, and obviously the people of my color, because in all of these movies that I watched, the people were, they were not Black. So I wanted to see maybe if it was possible for me as a Black child to actually make it there and take my people with. So the introduction to investing was that, and then obviously I went to UCT. I studied accounting because I thought, when I spoke to my teachers in high school, I thought that would be the right course of action, and I quickly realized accounting was very boring. But fast forward a couple of years, I started, before you actually fast forward a couple of years, I think I learned a very important lesson, because in my upbringing, I learned the lesson of the importance of having capital to play in the market. In university, I actually learned the importance of having float. So when something big happens in the market, you're actually able to use that float in the market. So I helped run a bunch of convenience stores across UCT. And I learned, reconciling, stock to the cash that you have, and obviously to the physical stock you have and the stock you have in the system, to see if there was any leakage in the system, reordering of the things that are, critical, the things that you need, but also importantly, not to overstock yourself so that you don't have, float to actually make change in the different convenience stores. So this was my introduction to business, which I think also played a critical role. So, and then while doing all of this, I had spare cash. And we had, a group in our dining hall that was very obsessed about investing. At the time, it was 2010. I think everything that you bought in the market actually went up a lot. This is where I was introduced to the Twitter community with the likes of Simon Brown, Keith McCacken, and his website, the small caps website. And I invested in a lot of those businesses. Some of the businesses I still own from today include Advitech, Transaction Capital, and Adapt IT. So those are, some of my biggest winners that I actually found from, that period of my, pre-career, so to say. So unfortunately, now we fast forward to actually moving from university to my career. I didn't actually start out in investing. Some might say that was unfortunate. I think that was actually quite critical and quite important, because this is how now I actually kick off my career in investing. So I joined Nestle as a corporate reporter in the head office, and obviously I moved around a lot. I worked in a factory for a year in Potchefstroom producing Cremora, and some of the factories that reported to me at the time included, the Babelegi factory, which produced noodles, Cremora as well, and a lot of other things, which was pretty cool. So I learned, the processing, costing, and then obviously corporate reporting. But what's important in those 2 years that I spent at Nestle, I actually joined the Nestle pension fund as a trustee, because they were overhauling all of that. And it was more like a democratic process of who to choose as a trustee. A lot of people knew that I was very passionate about investing. So when I put my name out there, people voted for me. Actually, I had one of the most votes for a grad at the time to actually join, to become the defined contribution trustee. So I was one of the 4 trustees there. It was pretty epic. The people I worked with were very knowledgeable, and I learned a lot. That accelerated my career a million times more than anything I could think of in terms of, making the change, 2 years later into investing. So this is when I actually met Paul. Paul, we actually met through Twitter. But one day I told him, look, I came from, Potchefstroom, and I wanted to join, the investment side of things of life. And I said, look, you could come through, since you're in Kilan, you could come through to our offices in Melrose Arch. And as they say in the classics, the rest is history. So I think it was December 2015, I joined. It was my first month of joining. And in that very first month, that's when I actually started as well to actually do TV, taking my Twitter account pretty seriously. And all of that stuff was, overwhelming. I remember my first appearance on, CNBC's Hot Stock. Sasha, our co-founder of the business here at Investec that we work with, said to me, look, whatever you do, in terms of, TV, just watch this one video. Basically, it was a video of a technocrat having a very important and very nice going interview. And 2 seconds later, the guy just chunders across, the interviewer and the studio, and he said, whatever you do, Bright, you will never actually, do this. Just don't throw up on studio. And that rewired my mind in terms of not being nervous being in front of the camera. Just focus on the content that you're prepared for, and then the rest will take care of itself. So now back to investing. So I've, Sasha and Paul themselves, taught me a lot about investing through the analysis process that they go through. I think somewhat I've gained some knowledge, especially in the SaaS side of things, where most of the things that I focus on are businesses that go viral, bottom up through, the SaaS model. So if you come to think of the businesses that we hold mostly in our portfolios, things like Facebook, Airbnb, and I even looked at Slack, which was acquired by Salesforce, and we now have Salesforce in our portfolios. All of these things, you didn't have a guy that had a suitcase and went and sold it to someone at a big corporate, right? These are things that start with employees from within and say, look, this is a great tool that we want to use, or this is a great network that all of my friends are in, and it sort of goes viral that way. So that's how we basically made a lot of returns for our clients by looking at this very specialized model of investing. But it's been very, very, very interesting for us, and how we've made money using that investment philosophy for all of our clients. So now coming back, to that, that story of my life, and now making it, bullet points, so to say, of how you yourself could start your own investment, and just to make it easy for yourself. Because from what I gather from social media and out there, the people that actually do have the money and want to start investing is the fact that investing always seems to be reserved for the few that understand and know what's going on, for the few that actually have a lot of money and are already wealthy. And as a result, people just get turned off by even the idea of investing. That's why they go buy things like property, because property you can feel, it's physical, and you can see, and you sort of can learn on the go, which is also true with investing. It's just that it's the perceptions that come with it, because we have a lot of barriers to entry. We've got high fees, we've got large minimums if you want to start investing. That's the biggest criticism I get, because we have a $25,000 investment minimum at Investec. The language that's used, the lingo is very hard to understand. Whereas, you could still go through all of that through your own personal journey without actually having to know the lingo so much. But we'll come back to that. And obviously, I have to mention that platforms like EasyEquities have actually democratized investing, have actually lowered their fees, lowered their minimums. They actually don't even have a minimum. You can have $300. You can get moving in terms of your investing career. So this is why I guess I'm here today, to actually speak on their platform as well. So some of the questions I get as well is, when is the best time, for example, to get started? I tweet about this a lot. I guess I'll use the Chinese proverb, which, the best time to have planted a tree was 20 years ago, and the second best time is today. So if you ever thought about, well, I have some money and I should start investing, I think it's actually true that, you just do something, you would learn on the go. And some of, the things that have helped me in my own investment journey to get there, like I said, it was the small caps website of Keith McCacklin, but the most important one is justonelap.com or .co.za, which is run by Simon Brown. Those two, and obviously their podcast respectively, and those two have been very important for me. And obviously being on the, this platform, these guys also, EasyEquities actually have nice blogs about how to get your, investment career kick started. Another question I get a lot is, what should I invest in? I guess, which is a question of investment strategy. I always say invest in the things that you use daily. I think this is also comes from, I think it was, what's his name? So I'm forgetting his name. Basically, he always said, what you need to invest in is the things that you understand, the things that you use daily. For example, in this, environment that I'm in right now, I've got Apple earphones. I'm talking to you guys through my Apple Mac. I've got my iPhone with me here. I'm using Zoom. I was having coffee right now, Starbucks coffee. So without even going very far, I already have these brands. This is obviously a start to actually look into these brands to see if there could be potential long-term investments. And the nice thing, all of those things that I've mentioned, they're already on the EasyEquities platform. So you can just look them up. Yes, it's Peter Lynch. Thank you. The chat has been very helpful. Peter Lynch, I came up with this idea of investing on things you actually understand. You understand yourself. So for me, also, this is part of self-discovery, because I think the best investment strategy is the one you can actually stick with. I can give you, the best investment strategy. All you have to do is just buy using this criteria and forget about it. But if it doesn't go with who you are as a person, every time that investment strategy just doesn't, outperform or underperforms for, say, 6 months to 2 years, you'll quickly abandon it and lose a lot of cash in the process, and not actually reach your financial goals. So an investment, strategy that resonates with you as a human behaviorally is more important than anything you'd ever get to do. So another question, I think this is because everyone is making money through NFTs, Bitcoin, cryptocurrencies, this and that. The other big question that I usually get is, how do you make money from investing? So this is going to be very a hard one, because investing for the long term, which is what we do mostly, is very different than just making money overnight. So again, it goes back to that personal discovery to say, am I going to be a trader who trades the price today and tomorrow, or I'm actually going to be a guy that buys these good quality shares and forget about them for the long term. I just keep adding every time maybe there's a market dip, or when I have enough capital that I will need for the next 40 years. So again, through your self-discovery and through obviously your financial advisors and those people that help you in your investment process, or the community, the Twitter community that we've created, you can actually just figure out all of these things. It doesn't happen overnight, but the most, I think, important thing is to actually get started. The rest you will learn on the go. And since I've mentioned basically the financial advice, I think the role of financial advice is actually quite important in any process, because these guys
on crypto there, and I think we just had to steal the spotlight a little bit. Actually,
had to. I was ready.
if we're going to get into crypto, we want to do it good and proper. Am I right, Liz?
No, we have to. We have to call the big dogs. You know how we do.
Plus, I'm here to be convinced. I'm here to be convinced.
Oh,
I
yeah.
won't lie. I won't lie. I am invested in the EasyCrypto bundle because it's wonderfully diversified and that helps me sleep at night. Why are you so crypto crazy?
Because I'm an aggressive guy, like the guy that's going to come up now. This man broke his arm because he's a petrol head, then decided he's going to get married with the cast on.
Damn.
And then yesterday we decided to go to the Pablo Clark Racing and just have a day as F1 simulation, driving the Ferraris. And I'd like to say I kicked his butt, even though he's a petrol head. So I wonder, I hope he brings the fire today, because yesterday I definitely kicked him.
So basically what you're saying is he's got a pretty healthy risk appetite.
Healthy is the understatement. He is risky to the T. There's risk and then there's Rob.
Nice. So you're obviously talking about our VP of Finance, Rob Graham, and I'm going to let him come and steal my seat because he's far more interesting than me.
See,
so Rob, come on down.
So easy, so easy. So easy, so easy. You make it easy.
And welcome back, investors. We've got Rob Graham in the seat today. Did I hurt your feelings yesterday?
A little bit, must admit, but next time I'll get you.
Okay, next time. But anyway, guys, we are here to speak about crypto, and we brought in the big guy, Rob, to just dissect it a bit more. And I know he has prepared a few little notes that he wants to speak through. And then once he's done speaking through that, then we'll take it over and ask him a few questions that you guys have. So if you have any questions for Rob about anything crypto related, just drop them in the chat section. I hope I can read them and ask him. But for now, take it over, Rob.
Thank you very much, Les, and thank you very much for everybody for having me. So my topic for today is crypto, the bad, the good, and the ugly. And I thought, the best way to approach this would be to kind of do an industry retrospective, look at the last 13 years in crypto. There's some good things that have been achieved, but there's been a lot of hype around blockchain, and a lot has not been achieved as well, and there's specific reasons for that, which I'll get into. But if we look at the last 13 years in crypto, it's really been, a period of building out the core infrastructure, which is, going to enable the next wave of businesses. And some of this infrastructure, there's 5 key points that I've highlighted here today. The first one is around wallets, which is, where people can store their crypto, they can send it, and they can receive crypto very much like your bank account, but the crypto version. And, there's 2 different types of wallets. You get non-custodial wallets and you get custodial wallets. A non-custodial wallet is where the user protects their own keys. They've got to, store their private keys somewhere and not lose it. And all too often people do lose them, and it actually creates a very terrible user experience. So if crypto is ever going to compete with banks, that problem needs to be solved. And this is where the custody solution comes in. And custody is not just important for wallets, it's important for a lot of the other businesses people want to build. You can imagine tokenizing shares and this kind of thing. You can't have people lose access to their shares. And so it's kind of, we're in this ironic situation in crypto where people always talk about, decentralization, and you want to be your own bank, and it's kind of always going to end up back in, having trusted third parties or financial institutions perform some of these core market structures. And so, that's kind of where the industry is going, and it's quite interesting. And just to touch on custody, our EasyCrypto 10 product, or the EC10, we've just implemented a custody solution for it. So if anybody is invested in that, you can, rest assured that your coins are very safe. I think we're the only crypto business in the country that's actually stored assets with BitGo. That's the American custodian. And we've also implemented our own proprietary solution for safekeeping some of the more readily accessible and liquid assets. And then kind of the next component I'd like to talk about is, how the industry's managed to integrate the traditional financial system to the crypto system. So a lot of people in pretty much every country in the world, the businesses have built, the integration to the fiat on and off ramps to allow people to easily buy crypto, sell their crypto. And this is very important for businesses, because if you want to enter a new market, there needs to be liquidity, there needs to be exchanges. And this is another kind of base layer that the industry has been focused on. And this kind of goes hand in hand with some of the trading venues that are out there. And, at EasyEquities, we're very focused on democratizing access to finance. And I think crypto has done a lot to also democratize access for the retail community. There's very low transaction fees for trading. In many cases, you get rebates if you, place limit orders and this kind of thing. And yeah, there's live pricings for free. The platforms are for free. And so I think a lot of interest has been created in trading, which is, been good for people. It's educational and it gets people investing, and that's been another good thing. And then the fifth and last kind of core pillars around regulatory compliance. A lot of the fintechs, any fintech entering this space is going to be required to do all the anti-money laundering compliance, and blockchain is very interesting, where the entire ledger is visible to the whole, the whole world at once. And so what you're able to do is model all of the transactions from the very beginning of the blockchain up and until today. And people are building very interesting models of the flow of money, where the money is going, and who controls the money. And so you can start to model the relationships between businesses and criminals and syndicates, and you can kind of identify these things before they happen. And that's another key component that the industry's built. So those are kind of the 5 core pillars that have been focused on up and until this point. And then I'd like to touch on some of which has been disappointing that, people would have expected to have been built by now. When you read the title of the Bitcoin white paper, it's called, Bitcoin, a peer-to-peer electronic cash system. And, no one's actually using crypto as cash these days. You're not really able to spend it anywhere. There's in South Africa, PayFast used to actually have it available on their platform. So all merchants in the country that were integrated to PayFast were able to process Bitcoin payments, and they actually switched it off because the BTC network, it just became too expensive and too slow. It doesn't quite scale. It only does, 7 transactions a second. And that's kind of where the narrative started to change from electronic cash to digital gold. That's what everybody, kind of talks about. And the initial idea for Bitcoin was that it's a micropayment system for the internet that would make e-commerce and things really easy, and really, just a far better method of processing payments on the internet. And yeah, this kind of, started to break down. In about 2017, there's a lot of fights that started in the community. For some of you who would have been around, or perhaps not, in 2017, the developer community started fighting with each other, and you had what was called a hard fork. And this is where people disagree on the protocol and they can't come to a rational conclusion, and then the guys split off. And so you've had all these tribes that have started to have been created in the crypto space, and particularly in Bitcoin. So you had Bitcoin, then that split into Bitcoin and Bitcoin Cash, and then Bitcoin Cash split again at the end of 2018 into Bitcoin Satoshi Vision, or Bitcoin SV, and Bitcoin Cash. And so you've got these 3 kind of competing protocols for Bitcoin, where the guys have all disagreed on, how best to scale Bitcoin, what makes the most sense. And what's ended up happening is all the developer effort's been split. No one's working on the same thing anymore. So you've got duplication of effort, and a lot of hate amongst the communities. Recently, you've had a lot of 51% attacks against the Bitcoin SV network as people try to take it out. And so that's really broken down a lot of the, the drive towards enabling payments, really. With this whole scaling debate and BTC not really being able to scale, it means that a lot of the other use cases have been lost. If you think about the word bit and coin, the bit part actually speaks about data, and then the coin is money. And Bitcoin's actually money and data mixed into one. you know, and I think people get confused about what blockchain is. But really, blockchain is just a database. It's just a different type of database where if you want to store data on this blockchain database, you can make a little payment, and then that is basically how you pay to get your data stored on the database. But again, this isn't possible with high fees and, you know, network that doesn't scale. So some of the protocols do scale. So Bitcoin SV, as an example, scales to about 50,000 transactions a second for very low fees. And, you know, people are able to do things like store videos online or content. So the type of businesses that I see, you know, people creating in the future will be, you can imagine like a Facebook built on blockchain where you own your own pictures. Facebook doesn't own your pictures. And when someone likes your photos or they like your posts, they can make a micro payment to you. Or YouTube, you know, where content creators can put stuff online and the users can like the videos and make micro payments directly to them, and they can own their data. You know, these are kind of the models and the things that will be built in the future that I wish had been built by now, but they, you know, because of these debates and issues haven't. And so, yeah, I think that kind of touches on the good and the bad. And I guess one last point for those who are interested, you can go follow the whole, you know, who is Satoshi Nakamoto. It's quite a inflammatory discussion. There's a guy called Craig Wright from Australia who claims to be Satoshi. Many people think he isn't, but that's something interesting for people to go look into on their own.
Damn, Rob, you done killed it. Like, you brought the fire today. You took up all the time. Thanks.
Oh, no time for questions.
We couldn't even get the questions of the users. And now I'm going to have to deal with the brunt of that. Thanks. I guess that's payback. But it's fine. I'll deal with it. But guys, that was Rob Graham, the VP of Finance, telling us the ugly, the good, the bad about crypto, not EasyCrypto. But anyway, for those who love EasyCrypto is a bundle of the top 10 cryptocurrencies weighted by market capitalization. So if you like some crypto, it is on the EasyEquities platform. And guys, that's from Rob and I. We out.
Maybe just make one last statement on EasyCrypto. And you know, I think it's a fantastic product because as the industry is trying to figure itself out, many of the coins that aren't going to make it will fall out, and that, you know, you automatically won't have it in your portfolio. And then the ones that ultimately do succeed will make it back into the top 10. So owning the EC10 is probably the best way that I can think of to have, you know, continuous exposure to the best assets in the industry without you having to ever think about it. So thank you very much for having me.
Got it. Thanks, Rob.
Cheers.
So easy, so easy, so easy. You make it easy. Check out the formula, baby. So easy, so easy, so easy, so easy. You make it easy. Check out the formula, baby.
Right, guys, so I'm in studio with a very, very special guest who's actually become one of the Easy family recently, and you might know him because he's probably semi-famous by now. This is Cay-Low joining me today. Cay-Low has a Facebook group of over 100,000 investors who he's been engaging with over the last couple of years. And that's actually how we came to meet you, Cay-Low. You were reaching out to us, you were wanting to kind of help your community, and that's how we met you. And I think that speaks so much to our mantra at EasyEquities. We love seeing you guys creating your own content, your own communities, and helping us further our cause to make investing easy for every single person. So I think that's really beautiful. And that's actually what's put you in the seat here today. Now, before we get into all the cool stuff you're doing, I want to just, on that social media tip, remind you guys that we have an amazing competition running at the moment. So what you need to do is tweet a little bit about what you've learned today, anything about the Investor Conference using the hashtag Investor Conference and the hashtag EasyEquities, and to tag us, and one person stands the chance to win 5,000 big ones, baby. What would you do with 5,000 Rand?
I would buy penny stocks, that's
Obviously,
a definite.
obviously. Now, we've actually got a heavyweight from Financial Mail with us at the moment on the topic of penny stocks. I know you're a huge fan, so feel free to pick his brain. But Mark, are you there? Maybe you can just chat to us a little bit about penny stocks and your thoughts around those.
Sure, can you hear me? Are you hearing me?
Yes, we can hear you.
Okay. Yeah, it was interesting you guys had Gerrie on. I don't know if he's still there, but while he was speaking, someone just messaged me an article that I wrote in 2002 for another magazine, unfortunately, but it was, I don't think you can even, no, you won't be able to see it, but it says the best of times after the worst. It was about the listing of Capitec. And at that stage, the share was R1.20, and I picked it as a possible buy. I had R1.20. People who bought that share, they're singing now. Unfortunately, I wasn't one of them. But you know, I suppose that's the story of my life. Live and learn. Yeah, look, small caps are in a very interesting space at the moment. I must say, there's a kind of a mystery about small caps. People say, well, these things are speculative, they fly by night. You know, I couldn't disagree more. I mean, some of the most enduring companies in the JSE, and I've got a little list here. These companies lived in 1987, that's when I started my career in journalism. So I follow these companies pretty closely. I'm thinking of companies like New World, Bowler Metcalf, Combined Motor Holdings, Sasfin, Spur Corporation. They were around still. If you invested in those companies, and the dividends alone, you'd have made many more times your investment. And there's a common theme that if you're going to invest in penny stocks, look out for these things. They're very simple. Look out for good management. You can pick up good managers. They run the business well. They're disciplined. They're conservative. Look for the strong, dependable cash flows that underpin dividends over the years, makes it worth your while. And one of the key things that I always look at, the singular focus, and this is so important in small caps. If we look at all the companies I mentioned now, not wild diversification acquisitions, they stick to their knitting. When they do diversify, they do it small and carefully. I mean, people won't remember this, but Spur back in the day, in the late 90s, actually went into auto glass. They bought a company called Boston. It was a disaster, but it didn't cost them anything. They got rid of it, no damage to the balance sheet. That's the way to do it. And also check that owners are also invested in the business. That's a good way of doing it. And you know, you talk about enduring companies. You think about something like Spur. Okay, they've had a bit of trouble lately, but they've lasted decades. And you think of the companies that went, you know, just fell by the wayside. I think there was a Hagen's, Gold Brands recently. There was Taste Holdings. You know, very different companies compared to Spur in the way they ran it. One of the things I thought I'd look at just quickly, and I don't want to take up all the time, so I'll be quick about this, is just to, you know, kind of look at the Financial Mail small cap picks for 2021 and the reason I chose them. You know, I chose 10 shares, and for all the above reasons, owners being invested, good cash flow, single focus, excellent management. And I had a look at my list today, and we're up about 16% of the dividends that are included. We've got companies like Leader in there that paid a very big special dividend, so that made a huge difference. But if I look at our kind of blowout stocks, believe it or not, Caxton and CTP, just a brilliant business, run conservatively. Most of the share price is made up in cash. It's profitable. It's never made a bad acquisition. It does not allocate capital badly, but the market punishes it. So it was a doozy to buy. It's up 44%. The other one was a bit of a spec one with City Lodge, but again, excellent assets, and you can't replace those. So it was an easy one for a recovery, and I suspect there's more to come there. And interesting enough, the ones that went wrong were the ones where I walked away from those criteria that I normally apply. That being Net1, I took a spec on them. I thought some value would be unlocked. I thought there might be a special dividend. That's down 16%. And then the weird one, and this is where small caps can get very frustrating, is Pan-African Resources. And as far as I'm concerned, these guys don't really do much wrong. They're 38% down. And it's absolutely baffling, but that's what you've got to put up with sometimes. Maybe it'll re-rate later, who knows? But that's one of the frustrations of small caps. The market doesn't always recognize potential, doesn't see the potential, and you don't get the institutions don't often look at them. So you've got to have a long-term visage. It's not an overnight thing. For the moment.
Wow, that's so interesting. Penny stocks are kind of like the underdogs. Do you agree, Cay-Low?
I definitely agree. I mean, when I look at penny stocks, I'm actually one person who actually loves penny stocks. And for one, looking at my risk appetite, I mean, I was listening to Mark, and I think Mark would actually agree with me that when it comes to penny stocks, there's risks involved, right? I look at, for example, the type of, I think I can actually mention one of the penny stocks that I actually looked into, which is called Nutritional Holdings. Nutritional Holdings is a company that has deals over more than 2.something billion rand. And it has also acquired another company in the Arabs, if I'm not mistaken. So it does have value, but for one, if you look at how much it's actually trading at, or was actually trading at, it was actually trading at 1 cent. And then after that, it actually got suspended. So for one, I was actually hurt when I saw that, but I actually knew for a fact that, you know what, at the end of the day, when you go into penny stocks, know for a fact that the more you put in, the more you can lose. Yeah. But at the same time, the more you can actually make.
That's how risk works. And I mean, there's not a share on the stock exchange that has a perfectly beautiful line going up.
Well, the one thing about it is that when it comes to stock market, every single company in particular does have its risks here and there, but we wouldn't necessarily say that, you know what, everything is just going to be perfect as it's supposed to be. You know, so yes, there is risks involved.
Speaking of risks, I want to hear about your risk challenge. Tell me all about it. How did it get started? What does it entail? Give us the whole story.
Well, the 6 months risk challenge, you know, I mean, it comes from a personal experience. I actually started off with 100 Rand. I personally started off with 100 Rand. And well, I didn't start off with penny stocks. I started with large caps, like Sasol was one of them. I think it was like 2 or 3 companies that I bought in. And then from there on, then when I started looking into penny stocks, that's when I realized that, you know what, there's actually great potential within penny stocks. You can actually make a lot of money, but you can actually lose as well. So why not instead, if you risk 100 Rand, you can actually make 1,000 Rand, if not more than 1,000 Rand. I mean, for example, let's look at what Mark said about Capitec. Let's look at what happened to Europa Metals. Let's look at what happened to, what's this other one? The one that has been trending recently, Monster. Monster is also one of the stocks which was apparently a penny stock, if I'm not mistaken. But all of a sudden, they did mention that if you were to invest in it, you'd have a fortune at the moment. So penny stocks, you know, it's worth it. So that's when I thought of it. I was like, you know what? With this risk, with this 6 months risk challenge, if you invest 100 Rand, I mean, at the end of the day, what is it that you're going to be doing with 100 Rand? And I mean, I've sometimes been receiving quite a number of criticism saying, hey, 100 Rand is something that money that people need to use. Sometimes people don't have the 100 Rand. But for me personally, I didn't have the money when I started investing. I had to start off creating websites, doing whatnot, starting to raise money. And that's how I actually started encouraging young people to say, hey, listen, I'm not going to encourage you to say, start investing 1 Rand, 2 Rand. No, I want you to go big. And for you to go big, you need money. Where do you get that money? You need to work for it. You need to come up with initiatives, services, provide services that will be able to generate income for you to be able to get that 100 Rand. Because that's exactly where I still get my 100 Rand every month to ensure that I actually participate in the 6 months risk challenge.
So I think what you're speaking about here is actually prioritizing investing.
Yes, prioritizing.
Something that's actually essential and it's crucial. And for some of us, that means foregoing that cappuccino this week and taking that $30 and making that our first investment. But for some of us, that means hustling hard.
Hustle hard. You need to hustle hard every single time to ensure that you get that 100 Rand to be able to invest every single month.
Yeah, I can see you're a hustler. This is not your first rodeo. And I'm so glad that you're putting that effort into investing. So we heard from Mark about some of his top penny stock picks. First of all, for those of us who don't know, can you talk a bit about what is a penny stock? Like, we heard this term in movies like Wolf of Wall Street, and I've always heard this term, but what is it actually?
Yeah, when you talk of penny stocks, you're talking of something that's very dangerous, but at the same time, you can love it when it grows. Penny stocks are stocks that are usually less than R5, and which when you look at the US market, you're looking at $5. When you're looking at the Australian market, some sources say $1, some sources say $5. But more about that, it's all about volatility. You look at a stock that today you buy shares and then by tomorrow, it's sitting at 100% profit. And the next morning when you wake up, it's sitting at minus 50. So it just brings that adrenaline. That's what I would defy penny stocks as. It's the stock that actually brings adrenaline through its volatility.
And I mean, that volatility goes either way.
It can go up and it can go down. And that's why when you look at the 6 months risk challenge, it's a fact of saying it's R100. You can lose the R100 or you can turn. I mean, this is one thing that I always tend to tell people. A loss is only limited to 100%, but growth is not limited. It can reach 1,000, 2,000, 20,000, 30,000%. But
convincing.
I mean, that's why for one, I actually love the 6 months risk challenge. One of my stocks recently got suspended. Delisted. I invested R100 in it. And then before it actually got delisted, I actually profited from the delisting.
Wow.
Yep. That's actually what happens with penny stocks. Penny stocks have risks of being delisted. At the same time, if you look at the delisting, there's what we call voluntary delisting and mandatory delisting. Voluntary delisting is the part where you're actually going to be benefiting. Mandatory delisting is when the company is actually doing bad. And when that happens, you might actually be receiving 1 cent. What
I also like about this risk challenge idea is that you're encouraging people to get comfortable with the idea of risk, because
at the end of the day in life, every single thing that we come across, risk is involved.
And when you invest in property, there's a risk.
Property involved, risk involved. If you think that you're going to buy millions of cars and you're going to make money out of it, there's risks involved. You might buy those cars and next thing it doesn't do anything.
And I think the greater risk is that if you do nothing. So if you leave your money under the mattress or you don't do anything with it, what is that risk?
You see, that's where we start emphasizing on the fact that you need to make the effort. The same way with the stock market as well. You need to make the effort to do the research. The same way with every other industry that you want to start investing in. You need to do research before you actually start taking that risk.
So I wasn't that person. I did no research. I was listening to Bright Khumalo speak earlier, and he was talking about the brands he loves. And for me, because I was only investing with 10 Rand, I was very comfortable just picking a company I really aligned myself with, that I gave a big chunk of my salary to every month. And because I did that, I was able to then take the next step, learn, do my research. So we've all got to start somewhere.
That is definitely true.
Okay, before we hand over to our next speakers, I want to hear from you how your personal risk challenge is going. Are there any penny stocks that are your favorites? Which ones have shot the lights out?
Well, I mean, if 6 months risk challenge, it gets personal, but there's some stocks that are really doing bad, and there are some that are actually doing good. Like, for example, the one that just recently about to delist. And also for one, looking at the penny stock risk challenge, it's more of like an entry point for me. When I invest in a company, after that, I start paying close attention to it. And then when I realize that maybe it's the time for me to invest more, that's when I jump in. Look at, for example, Ellis, right? I jumped into it by the time, I think it was 6 cents. And then from there on, I added a bit more. That's when the share price actually went up.
So right sitting after. And watching and
more of like that.
I'm more of an active investor. I'm passive. I just tuck it in there and I let it be.
Well, at the end of the day, for me personally, I really just love the investment world, so I just love it.
Okay, one piece of advice that you could give to beginner investors.
Do your own research. No, I'm just kidding.
Like that.
No, well, I mean, that's how the community actually knows me. Like, I always emphasize, do your own research. The one thing that I would always say is that, when you go into the stock market, more especially with penny stocks, if you want to win a lot, you need to put in a lot. But at the same time, understand the fact that what you're putting in, you can lose it. And if you don't lose it, you can win a lot from it.
So guys, that's it from Cay-Low. We spoke a little bit about property just now. I'm someone who owned my own property and sold it and vowed I was never going to get in property ever again because of the massive amounts of admin. But there are other people who think completely differently and are super passionate about property. There's also new ways to invest in property that weren't around 5-10 years ago when I was doing it. And I can't wait to get into that a little bit more. Property trends. I'm sure we've got some property fans out there. What do you think about property?
Well, I love property. That's a definite. I mean, come on.
we gotta diversify our portfolios, right?
Well, I mean, you just gotta do the most, more especially when it comes to diversification. With property is one of them.
Great, guys. So we'll be up next with Mfolo and Standwa to talk more about property.
So easy, so easy. So easy, so easy. You make it easy. Check out the formula, baby. So easy, so easy. So easy, so easy.
Holly said we are. We love I'm Bonolo. No, absolutely. ETFs are one of them. You can look into property-based ETFs. Talking about ETFs, you should check out the August issue of eMag, where we chat everything property ETFs. Yeah.
And other way is to buy directly, and that's new platforms that can be public, saying the cloud.
It's cheap.
You can actually buy fractions of property, exclusive properties that you otherwise would not have had access to.
Absolutely.
Yeah, but I mean, we're here for the trends, right?
Yeah, and you forgot to mention one more way which people can get access to property, and that is going directly.
Oh, right.
Yeah, buying directly.
People can just buy like property.
Absolutely. And now let's get into what's hot in property, what's happening. Let's look at the property trends to look out for.
So I think we're kicking off with residential trends.
Yes, absolutely. Residential trends in property. One of those trends are immigration. So people are moving to different parts of the country. You know, we just want a new setting, new lifestyle, just a change of scenery without actually leaving South Africa. So you probably move to like a coastal area. Talking about coastal area, that's another property trend. Did you know that people are moving more towards coastal areas?
Yeah, and I can see why. I mean, who would want to live by the beach? I feel like Joburg is.
Sabawel, the beach. The Western Cape actually is increasing in people moving there. So that's quite interesting. Yeah. And another property trend to look out for, Sans, people are moving more towards gated communities and lifestyle estates. Looking at security, I think safety is one of the things that inform where you live and where you choose to buy your property.
Another shameless plug, actually, we're chatting to the Balwin CEO today, and Balwin does amazing lifestyle centers, lifestyle estates, you know. So, gravitating to this.
Absolutely, like the current IPO, the Kikuyu Lifestyle Estate, which is closing on Monday. So that's shameless plug as well.
So easy, so easy, so easy. You make it easy. Check out the formula, baby. So easy, so easy, so easy.
And we are back.
We're back.
Yes, and we're talking about the lifestyle estate being one of the gated communities that people prefer living in.
Yeah, and I think we were talking about how
people can invest in these gated communities on EasyProperties, with one of the IPOs, the latest IPO being Kikuyu, another Balwin development.
Closing on Monday.
Closing on Monday.
So you need to get that piece of that pie before it closes. You have this weekend.
Yeah, they have this weekend. Monday, it's closed.
And another booming trend to look out for, I think it's been happening before COVID started, but I think COVID really accelerated this trend, and that is small town living. People are moving more towards their native homes.
Yeah, I mean, it makes more sense. You want to be closer to home. And look, all of these trends are actually happening because of tech. I mean, people are working from home.
Absolutely.
So, I mean, why not just live where you want to, actually, where the standard of living is a bit more cheap?
Absolutely. So rent out your property in the towns and then move back home where you can work and feel comfortable. Cool. Now we've chatted a bit about residential trends. Let's talk more about commercial trends. I'm really interested. Sans, maybe tell us a bit more.
So again, with commercial trends, we're seeing things that were actually accelerated by COVID and the pandemic, but actually were happening well before. So for instance, more commercial properties, more people are working in co-working spaces. And so that, gives, employees more flexibility. And I think that's a new trend right now, especially in the digital age.
Absolutely.
Flexibility is key.
Agility as well.
So corny. And so, yeah, co-working spaces are the thing right now, as well as commercial properties being repurposed, actually. So with the pandemic, people aren't necessarily sure about the leases, the commercial leases. So we've seen a lot of commercial properties being repurposed. For instance, I actually lived in what was an office space turned into a residential space. It looked hideous on the outside, but on the inside, it actually felt like home. So we're seeing more and more of that, even on our shores, but definitely internationally. Also, what we're seeing is, unfortunately, the death of malls. With people buying things online, there's less need to, go to retail spaces and go to malls. So, I mean, we've seen this more internationally than locally, where even South Park actually made fun of it in one of their season 22 episodes, where a mall kind of represented a post-apocalyptic dungeon. So more people are, there's more commercial warehousing. That's why we're seeing Take-A-Lot taking over the N1, actually.
Absolutely. And talking about that, Sans, talking about malls, we've got Netflix now, Showmax. People aren't really going to the cinema anymore, so...
Yeah. And what's the point?
So go to a mall for ice cream? I think not.
But, I mean, I had started mentioning international trends. So, I mean, we're going to go into that a bit more.
Absolutely.
So with international trends, the kind of local trends are mimicking international trends. Internationally, more people are actually moving to the burbs as well. Yeah, more millennials are moving to the burbs, which is interesting. So less people are staying in the crowded cities and just, going out to enjoy the scenery in the suburbs and, more safer spaces. And we're actually seeing more international governments, being more eco-friendly. So for instance, California, the Californian state signed into law in 2018 that all new houses have to be solar powered, or at least have a component of solar power. So.
Sure.
Yeah. So, I mean, they're coming to play as well. So I think that's the international trend.
And I think it leads to the residential property trend that I mentioned earlier, eco-living, also known as sustainable living. I think we can see it across the globe, locally and internationally as well.
Hundreds.
Now, you spoke a bit about millennials. Let's dive into some of the demographics, to highlight and to look out for in the last 2 years. Did you know, Sans, that 42% of property buyers in 2020 were under the age of 35?
Really?
Yeah. And that tells you that millennials are booming.
No, we're taking over.
Absolutely. Yeah. I think the face of property buying is definitely changing.
And I think it's starting to look more like you.
Talking about looking more like me, did you know that women are more active property buyers in the last 2 years?
Nice. So,
absolutely.
So what, more ladies are taking over?
More ladies are taking over, absolutely. Also, another thing to highlight is that millennials can now afford to live in a suburb that they couldn't normally afford to live in a year ago.
And I think that's because I think we've seen our government play more of an active role in incentivizing that. So for instance, I don't know when it was signed, but
first-time buyers are actually given a subsidy when they're paying for, when they're making their first home purchase, up until, if your gross income is a maximum of 22,000 Rand a month. So that's actually incentivizing more people to buy property. And also we're seeing that I think for under R1 million, you don't pay transfer duties, if I'm not mistaken. So yeah, I think that's why we're seeing also a lot more first-time home buyers and the landscape is changing.
Wow, that's really interesting. Did you know that also the deposit which financial institution want from property buyers is also declining by 7.03% for first-time buyers and 9%.
Wow, that's awesome.
Talking about financial institutions, may be an important factor. Millennials will move to places and areas and homes which are more affordable. So basically, if they can afford a home, then they'll live in it. So price is still a very important factor when it comes to property.
Noted. So, with that, the changing landscape, more young people are buying property. I think, in as much as, COVID has sort of changed the landscape a little bit, I somehow feel like, everyone needs a home. Residential property is never going to go out of, fashion.
No, absolutely, absolutely. So I think that is it from us.
I think that's it from us.
I am passionate. I could go the whole day about it, talking about property, but we have a lot of exciting people coming up, and
Plus it's Saturday, it's time for us to party.
Cool. Thank you guys. Thank you so much for joining us.
So easy, so easy, so easy. You make it easy. Check out the formula, baby. So easy, so easy. So easy, so easy. You make it easy. Check out the formula, baby. So easy, so easy.
Guys, we all know that investing is a journey. It takes dedication, commitment, practice.
Discipline.
Yes.
And our next speaker lives by those principles. Discipline, he's got it all. He literally has got it all. Our next speaker is Valdalo. He went from Tokyo, he came to EasyHQ, he broke his hand while skating at the Olympics.
As a skateboarder, okay? Amazing.
Okay, I'm not done yet. He broke his hand and then still continued skating until the final.
Wow. I used to skate. Did I mention that? Yeah, you wouldn't say. You also wouldn't say I'm like an expert investor, but hey, I'm here to break stereotypes. That's what I do. So not unlike our very own ETF guru, Sean Keeling, we've got like some Olympians in the house.
In the house,
now,
literally.
Our Brandon competed with a broken wrist. Sean had like torn ligaments. And
like everywhere.
He did the things. He did the things in, where was it? Rio?
No, that was... Yeah, it was Rio. It was Rio, yeah.
He took a medal, guys. Ligaments, he was rowing, he took a medal. So basically, EasyEquities is like a winning company. That's all I'm saying. So I think here to tell us a little bit about his story and to share his experiences about being an Olympic skateboarder, should we bring him on?
Yeah.
Let's bring in Brandon.
Brandon.
So easy, so easy, so easy. You make it easy. Check out the formula, baby. So easy, so easy. So easy, so easy.
Hi guys, Brandon Valdalo here. I'm super excited to join you and the entire Easy community today at the INVSTR conference to speak to you guys a little bit more about winning in life, sports, and investments. So I'm going to share my presentation, starting off with obviously some photos to keep you guys interested. And yeah, let's get it started. So there we go. There's a photo of me doing a frontside blunt slide down the handrail at the Olympics. Pretty gnarly obstacle, to be honest with you guys. Ended up breaking my wrist.
during the competition over there on that middle obstacle. But let's get into it. Okay, so for those of you guys that don't know me, my name is Valdalo. I'm a professional skateboarder. I'm the current national champion, and I'm also the first ever South African Olympic skateboarder. Right, I'm proud to have represented the country, the continent, and the entire Easy community. So the reason I'm here to speak a little bit about my Olympic journey is because I feel like it's one of the experiences that I definitely experienced winning in my career. And without the Easy community, I don't think I would have been able to be the pioneer for South African skateboarding, or it wouldn't have been possible for me to qualify for the Olympic Games. Okay, so let me take you guys back a little bit to my link to investing. And let's go back to 2014 when I won my first ever South African championship. I won this big fat prize check of 20,000 Rand as a 15-year-old, and I went out to interview, and the interviewer asked me, so what are you gonna do with the money? So I looked at him and I obviously wanted to sound like I knew what I was talking about and what I was gonna do with the money. And I had this big scheme of saying, now I'm gonna invest my money. But obviously I had no idea of how I was gonna go about doing that. And obviously with the EasyEquities platform now, there's so many ways, and it's a user-friendly and it's an easy way for kids to even be able to understand how to invest their money and to move forward with starting their future. Okay, so there's a lot of similarities for me between skateboarding and investing. You might think that they're polar opposites, but I've definitely drawn a lot of parallels while working with the EasyEquities community. And the first one is obviously patience. All right. So in patience, for me in skateboarding, it could be learning a new trick, just trying and trying and trying until I get it right. But I'm not getting it right. I have to be patient with myself. I have to understand that I'm still learning. And it's the same thing with your EasyEquities investment portfolio. You have to be patient. You're not going to see growth right away, but you might just keep on pushing, keep on working. And that would take me through to the second point of here, which is dedication. Right? You're not going to get to the Olympic Games. You're not going to get to the top or the pinnacle of any sporting career if you're not dedicated to what you're doing. And I feel like you're not going to experience winning or success unless you stay dedicated. Right? And that would move me on to the third step over here, which is persistence. And like I said in the beginning, it's patience and me attempting those tricks and continue trying my best to succeed and do it. It's persistence. I want to succeed. I want to do better. And that's the same thing with your EasyEquities portfolio. You have to be persistent to keep on growing your portfolio. Right? The growth aspect for me is the fourth step, which I think is one of the most important things. Is in skateboarding, we're always trying to grow. We're trying to progress. We're trying to get better every single day. And I think the growth aspect of your portfolio as well is something that makes you very interested to want to look back and do more research on the market so you can see how your portfolio is growing in different ways, profits and both losses. So the fifth thing over here I wanted to speak about is risk and reward. Because obviously in skateboarding, I compete, I'm a competitive skateboarder, and you go through to a competition, you try a riskier trick, you're gonna come through, you're gonna get the reward from the judges. And I guess it's the same principle with investing as well. You have to be able to risk it for the biscuits, right? And obviously for me, skateboarding, it's very addictive because being able to express myself, do my own thing every single day and just create art at the same time and just progress and become a better version of myself every single day, that's addictive. And the same thing that I realized with my investment portfolio is watching the different like equities that are putting grow, and some are losing money a little bit, then I'm growing, and then I'm like, okay, cool, what's happening? And just staying, I guess, in tune with the whole entire market and what's going on is definitely addictive to me at this point in time. Okay, so I came here today about winning. And to me personally, I think that winning is pretty much all about perspective. So for me, the definition of winning, in my opinion, is not defined by getting a gold medal or coming first place in a competition, right? For me, I would like to say one of the first things that I can say that I've won is that I get told every single day by people how lucky I am to be able to go out there and do what I love every single day of my life. And I would count that as winning, to be honest with you. Now, the next thing I would say is achieving my own personal goals is winning, even if you don't come first place. So for me, when I was 10 years old, I was always watching TV and watching the Life of Ryan skateboarding episode with my mom. And I was like, I want to get to the pinnacle of competitive skateboarding. And I thought that was going to take me to the X Games, but little did I know it actually took me to the Olympic Games. So what better platform to do that than the Olympic Games? Okay, so constant progression, learning from your mistakes and picking yourself back up after failure is all winning. So it's more so about your attitude and the way that you look forward to doing things that I would say is winning. And for me, in the beginning of my Olympic experience, 2 days before the competition, I ended up breaking my wrist. And I took the knock and I decided, you know what, during the competition, I was feeling disappointed because I was missing different tricks and tricks that I know I had every single try. But I actually ended up changing my attitude, being more positive, enjoying myself. And then I started actually doing a lot more tricks and landing tricks and enjoying myself at the same time. And let me be honest with you guys that you'll never know what it feels like to be a winner unless you have failed before. So that's very important. Okay, so because I'm speaking to you guys about winning in sports, I'd say that my Olympic journey is one of the experiences that I would say that I've definitely won. I'm a part of the first ever group, the top 20 skateboarders in the whole entire world that represented skateboarding, and the first ever African skateboarder to represent the continent at a skateboarding event. So let me take you guys back a little bit into my qualification season, where I traveled to London, Brazil, as well as the USA. There were different contests that I had to go out, which EasyEquities were helping me pay towards the entrance fees and all the things that I had to, I guess, afford and be able to fund. They were helping me out there. And they also, you know what, helped me out to realize that there's going to be a future for me beyond skateboarding, and I need to focus on investing in my future from an early age. So I guess they made my dream as a 15-year-old come true a couple of years later by helping me invest my money and understand what's actually going on in the marketplace. But then, okay, after the 2019 season, the 2020 season was canceled due to COVID. I'm pretty sure you guys all know we're in lockdown. And then 2021, we had the national championships. And like I said, that was a high in my career. I just won the national championships. I secured my spot in the Olympics, and I was at an all-time high. Okay, and the fourth thing over here I'd say is the World Championships in Rome. And this is where I can compare skateboarding to investing again. I was at an all-time high after the national championships. And then after that, I went to the World Championships, and I was letting a lot of external factors distract me from succeeding. And it was definitely my attitude as well going into it, but I didn't do as well as I would have hoped in the World Championships, which made my confidence go all the way down. So like I can say, skateboarding, again, it's all about comparing it to a graph, and in investing, it's ups and downs at the same time. So obviously with my, I guess, confidence being down the drain at that point in time, I decided I had to go and train in Barcelona, use their amazing facilities, and also train with two of the best skateboarders in the world that I know. And yeah, they pretty much helped me build my confidence back up so that I could get to a point that I was ready and feeling ready, confident, mentally and physically to be able to participate in the Olympics. Okay, so now let's go on to the Olympics. And while I was there, okay, this is a little bit of the journey. There's some images that you guys can see of me skateboarding different contests. And I guess it's the qualification. The bottom left one over there is the national championships photo. And then there's the world championships and also a Tokyo photo in the mix. There's more Tokyo photos, more qualification photos as well of me performing different tricks that I know and that I really love to practice every single day. 5 to 8 hours every single day, pretty much of training would go into it. And yeah, just being a part of this Olympic journey and going there and being able to represent myself, represent South Africa, represent the continent as a whole, as well as the whole entire Easy community. They've definitely played a huge role in what I've, I guess, achieved. And I would like to thank them so much for, I guess, being a part of all of it. Okay, so just to sum it all up over here, I just want to say that winning in life, sports, and investment all require the exact same principles. So I would say dedication, discipline, and patience are 3 things that you have to apply in all aspects, I guess, of life, sport, and investment to be able to feel like you've won or to succeed. Right, and the next step I'd say is achieving your goals and dreams is winning, even if that means you don't come first place. So although I didn't get that medal, I'm more motivated than I ever was now to go back, get to Paris, qualify again for South Africa and bring back a medal with the experience that I've gained as well. So the Olympic dream has definitely taught me the formula that I believe I need to be successful and win at everything I do. Okay, I guess Olympic core values are built on respect, excellence, and friendship, which are all values that I've seen being practiced in the entire Easy work environment and in the entire EasyEquities community. So just to sum it up there, that's the reason that EasyEquities is destined for success. I can't thank you guys. I can't thank you, Charles, Brad, Carl, Standwa, Lesedi, Bonolo, and the entire Easy community for your support. Look forward to going back out there in 2024, representing the community, and bringing back a medal for the fam. Thank you, guys.
Wait, I'm not letting you go anywhere.
Oh, okay.
Yeah. As a semi-professional skateboarder as well, back when I was 14 and could ollie on the grass, I wanted to just chat to you a little bit about, I mean, I obviously didn't get very far in my skateboarding journey because I was too scared. Like, I was so nervous I was going to hurt myself. Also, I didn't want to mess up my hair in front of all the skateboarding guys. Super cute. I'm sure you've just got 30 screaming fans out there already in the last 5 minutes.
There we go.
So I think a lot of people are just so scared to start investing as well. There's this element of fear. When you were standing on the edge of like your first, I don't know, half pipe or like something that was like a super intimidating move, how did you hype yourself up to just do it? What was that kind of motivation?
So I would like to say music plays an important role in that. And also just the feeling of wanting to achieve what you know, it's the bigger picture. And it's all about just getting past that first step. So you try the first attempt, you realize, oh, you haven't hurt yourself. Oh, it's not as bad as you thought. Let's keep on going. Let me try again and keep on attempting. So I feel like it's just taking that first step that will actually help you to be able to conquer your fears and realize that you can achieve more than what you think you can.
What's your walk-on song? Like, what hypes you up?
I would say it's Mini Men by 50 Cent. So,
are you a hip-hop guy?
I'm a hip-hop guy, but I appreciate all different kinds of genres of music. So.
Mine would be Beyonce Bootylicious. So I feel like
at least we communicate.
Yeah,
nice.
You can teach me how to skate again. Although now I'm into roller skating. That's a whole other
That's a little bit more dangerous. That's attached to your feet. I feel like it's a little bit more sketchy than skateboarding.
Damn.
But you'll be fine.
So I think to get where you've gotten, you also need an incredible amount of support. So I want to give your mom a shout out to Dina. She's obviously been a pillar in your life, and she's also part of the Easy community, which is amazing. What other kind of sources of support have you had in your investing and your skating journey?
So I would say the most important support has obviously been from my family. It comes from the beginning, them understanding that I need to put my university on the side, be able to focus on my dreams while I'm still young and while I'm able to achieve it. That is a big step. The next thing in terms of financial support, obviously, to be able to attend all of these competitions and be out there, it's been EasyEquities that have come through to support the boy and, you know, just trust in the process. And at the end of the day, I feel like I'm indebted to bring back a medal, not even just for South Africa, but for the entire Easy community over here.
So next time we meet up, I'm going to be talking to you about your amazing portfolio because we're going to keep supporting you. And you're going to teach me how to ollie for real, not on the grass. And that's going to be at our next investor conference.
That's it.
Okay.
That sounds like a deal.
Awesome. So guys, on the topic of support, it leads me to our next speaker, who is a massive support, not only to everyone who works at EasyEquities, but to our community. Because the internet has done amazing things. It's allowing you and I to stand here right now, sit here right now and talk to thousands of people out there. So the internet is incredible. It's opened access, which is one of our big mantras. However, it's also opened the door to some shady characters. There are some dodgy people out there doing dodgy things on the internet, and we've got a powerhouse of a woman who's going to be chatting next. You probably know her from Twitter. She's our FinTwit lawyer in the house, our legal eagle. Coming up after this quick break is going to be Sasha Graham, who's going to teach you guys how to look out for those dodgy internet fraudsters and stay safe. That's coming up now.
Stay woke.
So easy, so easy. So easy, so easy. You make it easy. Check out the formula, baby.
Good morning, everybody. I'm so happy to be joining today on the Easy Investor Conference. I'm going to keep it super simple today and share my top 10 tips to protect yourself and your investors from fraudsters. It is in presentation slides, so you can take notes if you want to. And here we go. All right, so top 10 tips to protect yourself and your investors, your investments from fraudsters. Let's start with the most cardinal rule. If it sounds too good to be true, it usually is. Now, if you look at my screen, you'll see I took an actual screenshot from Twitter of a Trade For Me special. So this was a real Twitter post where someone said, put it out to the community and said, I'm taking 30 people to invest today and you would get paid after 4 days. And they tell you basically what your returns would be. So if you invested 300 Rand, you would get 850 Rand. I mean, this is almost doubling your investment profits. Well, that does sound good, but is it too good to be true? Yes, it is. And most people who are in the stock market already will know that these sort of returns are not impossible, but very unlikely over such a short period of time. And this is why scam artists, they tend to prey on people who are not very clued up in the stock market. And if you were struggling, and we all know it's hard economic times right now, and you saw a post like this, you might be tempted to do it. But that is why this is the utmost cardinal rule. If it sounds too good to be true, it usually is. Overinflated, guaranteed returns are basically one of the biggest red flags that this is a scam, and you should stay very far away from these sort of things. If we head to number 2. Okay, number 2. Before you do in any investment business with any person or entity, check that that person is licensed by the Financial Sector Conduct Authority. So South African law requires all people or entities who are providing financial advice or performing an intermediary service, such as the EasyEquities platform, in respect of a financial product, is required to have a license and be licensed by the Financial Sector Conduct Authority. And one of the requirements is, if you're licensed, you have to have the fact that you're licensed on any website, on any marketing material you have. So please go check that out. And if you want to verify someone, you can actually log on to the Financial Sector Conduct Authority's website. They have a section to search for regulated entities. You can go, you can type them in by number or by name, and you can actually go verify that these people are actually licensed. And you want to avoid doing investment business with any person who's not licensed, because they don't fall within the scope of the regulator, and you could really be opening yourself up to a huge can of worms. And you really want the protection of the regulator, because there are protection measures in there for you, such as being able to approach an ombudsman to assist you with any queries or complaints you have about a financial services provider. So this is really, really important. I don't think a lot of people know that you can actually go check on the regulator's website to check that someone is actually licensed. So let's move to number 3. Don't give your personal information to strangers. So this is just key. Identity theft is such a huge thing globally at the moment. And, you know, by giving your personal information to strangers or making it available on social media, you really are opening yourself up to potential issues. I mean, just to give you a practical example, if I was a scam artist and I wanted to do some nefarious activity, I had all your personal information, I could quickly go and create any account with you on any person's platform. Let's take EasyEquities, for example. Create an account in your name. EasyEquities thinks, whoever is you, and I go do some dodgy things, or I get up to some nonsense. And basically, EasyEquities might think that that's you. And if they decided to take action against you and, you know, have you arrested or whatnot, they might be coming knocking on your door. And it might be really, really difficult to prove, especially in this digital day and age, that the digital profile that someone has on you isn't actually you. You're not the warm person hiding behind that digital identity. So please be really, really careful. Don't give your personal information to strangers. Number 4. Oh, I like this one. Reputable investment companies are very unlikely to conduct business via social media. And what I'm getting to here is Telegram groups. Guys, there is no asset manager, no digital platform, no reputable investment companies that we know about, including EasyEquities, who conducts their business via a Telegram group. I mean, not even the reputable Forex trading companies do their business via Telegram groups. Guys, this is like one of the easiest, scammiest things that they're doing these days. You get sent a Telegram link, you join the group, all of a sudden people are asking you to deposit Bitcoin here, or you'll make 1,000 Rand with your 10 Rand in 4 hours. No, no, and no. The real reputable companies have proper digital platforms, they have proper websites, they have offices. They do not conduct their business over Telegram groups, nor WhatsApp groups for that matter. Let's move on to number 5. Be wary of these cold calling representatives. So I want to speak about this specifically in relation to EasyEquities. So I have noticed, or this is what I've been made aware of, is that all of a sudden you might join one of these EasyEquities community social groups or any investment social media group, and you say you're new to investing, and all of a sudden you get this call from someone from EasyEquities saying, "Oh, hi, how are you? We'd love to open your account, but first you have to give us 2,000 Rand," or something like that. I promise you, EasyEquities does not phone anyone to try and encourage you or persuade you to open an account. We're not telemarketers. We're not trying to sell our products via telephone communications. And I'm pretty sure not any other investment platform does. You know, that's just not how it operates. And you should be very cautious about the timing of this. What were your actions before that led to this so-called cold call that all of a sudden read your mind about how you wanted to start investing? And here they were to just present it on this beautiful gold platter for you. Be aware of that. Ask, how did this person get my number? This seems awfully weird. I know we sometimes think social media listens to what our thoughts are, but just question that. The timing of the call. How did they get your number? Is it normal? And it's from an EasyEquities perspective, it is not. If someone phones you claiming to be from EasyEquities, it's a no, no, and no. We don't do that. So be wary of those cold calling representatives who are probably not who they say they are. Let's move to number 6. Don't make yourself easy scam bait. So what is this? This is when you go onto social media and you say, "Hi, I'm new here. I don't know anything about investing, but I have 50,000 Rand to invest. Please help me." Okay, so the minute you do that, you've basically put the biggest red cross on your back, and all of the dodgy scamsters and fraudsters are going to be sliding right into your DMs with all of their promises about how they can help you, and they'll send you all the Telegram links in the world. And basically, you've just notified and let them know that you are pretty much ripe for the taking. So don't make yourself easy scam bait, especially on social media platforms. I know that there's a lot of community group and community feeling in those social media groups that are really warm and fuzzy, but I promise you there are wolves hiding in sheep's clothing there. So try not make yourself easy scam bait. Don't tell people how much money you have to invest. It really, really can put a target on your back. So please be careful about that. You can obviously still ask questions because you are new, but just be cautious. If someone all of a sudden is jumping into your DMs, offering you these crazy guaranteed inflated returns, tell them, "No, thanks. I know you're a scammer." So yeah, let's try stay away from that, but still keep learning in the process. Number 7, I love this one. Don't pay funds into someone's personal bank accounts. Guys, this should be a massive flag. So this person, let's join some examples here. So they are one of the cold calling representatives, apparently from EasyEquities, and they say, okay, to start your investment journey, I need 2,000 Rand from you, and here are my personal bank details. No, it's not how it works, okay? So actually, and this is actually supposed to happen by law, when you open an account, let's say with EasyEquities or any other platform, you're required to have your identity FICA verified by the institution. Once you have been fully FICA verified, only then may the entity give you their banking details. And so you can then deposit money. So guys, please, if someone claims to be from an institution, whether that's EasyEquities or any other asset manager or any other platform provider or stockbroker, don't pay it into anyone's personal bank account. Make sure you have the institution's bank account and only pay funds directly to their bank account. Even if someone has convinced you that they are an account manager or intermediary, do not do that. Pay it into the institution's banking account from an EasyEquities perspective. Make sure you're paying funds directly into your EasyEquities wallet. Do not pay someone else and believe them that they will fund your account for you. They will not. They will take your money. I mean, if some of you would like to do that, I will leave my bank details at the end of this presentation, but hopefully, I hope I don't see anything at the end of this. Let's move to number 8. Don't be afraid to ask questions. And this can take many forms. This is asking questions to the actual institution in question. I promise you there is no legitimate business out there who will not gladly answer any questions you have about any investments, about the way their business works, about the way the platform works. They will spend hours answering you and telling you all you need to know. Now, this is very different from when you try to ask the scam artists any questions. You'll find that if you ask a question, how does this work, or what does this mean, they will very quickly tell you that they don't have time for this. They will pressure you into making the investment. They'll say, no, but you have to do this now and just do it, or don't waste my time. I don't have time to explain this to you. Sasha, you should know this already, or do your own research. That is what scammers will do. They will pressure you. They'll try use fancy jargon to try and persuade you that they know what they're doing, but don't fall for it. Ask questions. Also, go to your community. If something feels strange, ask on one of the community groups. Guys, does this look legit? I promise you, 9 times out of 10, people are very quickly going to tell you this is a scam, or no, I know about this, this is legit, or whatever the case may be. Ask questions, whether it's to the institution itself, whether it's on your community group, whether it's to friends and family. If something is not feeling right, ask questions. Okay, let's move to number 9. All right, be wary if you're required to pay money up front or required to pay money to release profits. So, I mean, I have seen some of these things where it's like, pay me 2,000 Rand to open you up a EasyEquities account. No, it does not work like that. You don't need to pay any money to open that account. The opening of the account is free. And if someone's trying to persuade you to pay money up front to open an account, that is a massive, massive red flag. Another thing I've also seen quite a lot of trends on is someone, okay, they've been brought into the fray, the scamster has managed to get them to give them money to start this investment journey, and all of a sudden you get an email 2 weeks later or a month later that says, pay me 5,000 Rand to release your dividends. Guys, no. Dividends, if you are a shareholder and you own a share and you qualify to receive that dividend, you will be paid that dividend directly into your stockbroking account. You don't have to pay money to release profits or release dividends. That is an absolute no. These are massive red flags. Don't do it, especially with EasyEquities. You don't need any money to start your investment. Your account opening is for free. You deposit funds directly into your EasyEquities account and you buy your shares. If you make a profit or if you receive dividends, those will be paid directly into your account. Do not get caught up with these guys who say, pay me 10 grand, I'll make you 100,000 rand, and then pay me 50 grand to release the profits. No, no, and no. Massive red flag. All right, let's move to my last tip. Remember that Google is your friend. So as much as it's scary for us because we put so much information about ourselves on social media, which makes it really easy for fraudsters to get to know us. I mean, you'll be surprised if you actually just go search yourself and see what's there and what you may have posted here or then when you're selling something, you put your phone number there, that's how they got hold of you. They know where you live because you tagged your location. They know a lot about you on social media. But the converse also applies. We can also search for information about these scams and about what they're offering. So, I mean, Trade for Me, as which was on my first slide, if I went and did some research on who this person is or what they're doing, or one of these random Forex traders on Telegram, I think I was on one group once because I was sure it was a scam, and it was Golden Traders Investments, I mean, where I could make a fortune, and you just go Google them and you see what, are these people real? Do they have a real website? But don't be fooled, websites can also be very legit. But have a look. Go see if people are doing Hello Peter complaints about it. Search, search, search. And if you find nothing, it's probably a very bad sign. Because if you look at EasyEquities, for example, you search EasyEquities, you'll find heaps and heaps of information. You will actually find articles that say, is EasyEquities a scam? Like, do your bit of research as well. Google is 100% your friend. And that brings me to the end of my presentation. These are just your top 10 tips. I mean, we could go on for days about this, but those are just some basic tips which I think can really keep you safe. Remember, look, stop, think. You're your very own human firewall, and you need to protect yourself and your investments from fraudsters. Thank you very much.
So easy, so easy. So easy, so easy. You make it easy. Check out the formula, baby. So easy, so easy. So easy, so easy.
Guys, you can't drive around Joburg without spotting one of these properties. Our next CEO is from the company Balwin, which I'm sure you've all heard about. A couple of interesting things to know about this guy, Steve Brookes. He was a visionary inspired by Richard Branson, man to my own heart. There's close to 100 developments of Balwin around Joburg and the country. And actually at the moment, we've got their latest IPO up on EasyProperties. So you definitely have to go and check that out. Now, equally noteworthy is Julieta and Rob from Financial Mail, who are going to be chatting to Steve all about property and Balwin. So in just a moment, we'll be up with the man himself.
So easy, so easy. So easy, so easy. You make it easy. Check out the formula, baby. So easy, so easy. So easy, so easy.
Thanks, Carly. Thanks, EasyEquities investor community. It's fantastic to be here together. Rob, of course, is the editor of Financial Mail. I'm the money editor. And Steve Brookes is the CEO of Balwin Properties. Steve, 3 years to go from being a CC, you bought a CC called Balwin in 1996, to a JSE listing in 2015. It hasn't always been an easy time on the JSE. Firstly, are you glad, though, that you went the route of going public and having a JSE listing? Steve, can you unmute yourself? Because driving and talking is, I find, a bit of a challenge, personally. Steve, just unmute yourself, can you? There we go, I think.
Oh, you're a bit like a poltergeist, but it's great.
Steve, did you get our first question?
Yeah, I did. So I'm just going to pull over for a minute because I see you both questioned me. So let me just.
Yeah, you need to be on your A game here.
Let's just get it. Be the B game's fine.
Things which is really. Just give me a minute.
I mean, while Steve pulls over, being a listed company isn't, I mean, you can do a lot. Being a listed company is quite tricky. You've got all the scrutiny of people like ourselves, people like the entire equities investor community.
I mean, any company goes through good times and bad times, and it's not nice to have the public glare on you when you're going through a rough time. I mean, which company wanted to be under the spotlight over the last year with COVID? You know, if you're recovering, you don't necessarily want the scrutiny of that. So I think it doesn't help you during the downturns. But Baldwin's done well over the while.
Steve, I mean, are
Hi,
you
guys.
happy? How's it? Are you happy that you went the route of listing?
Yeah, 100%. You know, the listing is a complicated arena for a development company, but I like the discipline. You know, twice a year you get measured for interims and final results. We're about to close for interims this year, and I must admit, without being too preemptive, I think we've had a fantastic ride these last 6 months. So it's been a great journey.
But it hasn't always been easy. I mean, you know, over a 5-year period, your shares are down about 45%, although on a 2-year basis, you're up, 57%. So there's been a fantastic recovery in the last 2 years. And I guess it begs the question as to, is residential property in particular, because that's really where you focus yourselves, is it still a good investment in South Africa?
Yeah, I think, you know, in South Africa, we're a growing economy. You know, the housing, there's a tremendous need for housing. We've got 3 brands. We've got our green brand, we've got our classic brand, and our signature brand. The biggest growth is in our green brand, which is trading between 599 and 1 million. I mean, that market is absolutely outstanding. And, you know, as of last night, we were working quite late last night, as usual, on a Friday night. And we've got a great announcement that we've just won 7 international awards for our property developments, and obviously our green brand's one of them. So we really are very proud of what our humble company is achieving at the moment.
Steve, can I ask? I mean, you're living in a country where there's massive unemployment and it's not a great economy right now. I mean, you're still basically betting on, you know, the population being able to buy new homes and buy into your company. Is that, I mean, do you not feel the fragility of the wider economy on your company? I mean, surely that must affect a company like yourselves?
No, I think the exact opposite. You know, the price range that we trade in, you know, I'm constantly pushing to have our average house price lowered. So we're at about 1.1 million as our average house price at the moment. So we're in the very affordable space, and our developments are extremely sought after. Our lifestyle activities and our developments are off the charts. We've also now just recently, I was very pleased to see your skateboard on the program earlier. We've teamed up with Dallas Wilbur, so he's doing a skateboard park in one of our developments, hot out of the Olympics. So we're always doing innovative things. I'm bringing padel to our developments, which is the fastest growing sport in the world at the moment. So we're finding our sales, we can hardly keep up with demand at the moment. You know, we need to achieve between 300 and 400 sales a month, and we're achieving that quite easily at the moment.
The thing is, I imagine a lot of it is helped by the fact that you've got historically low interest rates, and you've also got banks that are finally willing to give out 100% home loans. And I wonder how long that's going to last, especially if interest rates start creeping up again, as they will likely do as things normalize post-COVID. I mean, is that going to bring an abrupt screeching halt to the sort of sales that you're making now?
No, look, sorry, South Africans are very pessimistic. You know, first of all, interest rates are not going to go. And our interest rates are not going to go through the roof. I think we have a very good government. We have a very good president. You know, I think interest rates, you know, they are cyclic. We all know that. But, you know, we've been one of the world first to come up with a green mortgage. All our developments are heavily green rated at the highest level we can get to. All our lifestyle centers are 6-star graded, and our apartments are all EDGE advanced, which is the highest. I'm also on the board of the Green Building Council, and we get a concession from all the banks for our clients. We're nearly there. We'll soon be announcing 0.5% concession for our greening from our clients. Now, obviously, you guys are all financial people. 0.5% of a low base, which is at 7, less a bit of a discount. If you're a good client, all of a sudden you could be at a 6% interest rate, which makes a massive difference to our clients.
Steve, can I ask, how do we understand the share price movement over the last, the last couple of years? I mean, I know, you manage the business, not the share price, but like Julietta said, over the longer term, it's down, even though it's recovered over the last 2 years. I mean, does this illustrate that your vision took a while to catch on, or how do we read that?
Yeah, look, it drives me mental. I own 36% of the business, and I'm actually making a move to buy a bit more. So, a large amount of my wealth and my family, and obviously I'm very, very emotionally and work-wise invested in this company. I think the market misunderstands us. We've got a brand, which I think they misunderstand that for starters. The brand is powerful. We are now about to unleash our annuity income, which a very dear friend of mine asked me to do a few years ago. And I said to him, we're not ready yet. We are ready now. There's a massive, massive play on annuity income coming up. And I think that'll give all the people that don't understand our brand a bit more comfort. But, we've consistently produced good returns. We've never had a year where we've gone into the black, as they keep saying. That we've really, or the red. I don't know what you guys call these different indicators.
You don't want to be in the red too much.
No, in the red. I mean, sorry. So yeah, we're consistently banging the lights out with profit after tax, and I honestly believe the share is grossly undervalued. And I believe once we explain to the market our annuity income, I think that the share will either re-rate or climb over the next 3 years. I can't see it being anything under between 9 and 10 rand a share, which in all honesty is what we listed at. So it's not that I'm saying the share price should be at 30 or 40 rand and I'm being a complete hooligan. We listed at 9.85, if I remember correctly, somewhere around about there. And, that was an honest valuation, and people believed in us. So I believe that the share price should definitely be at least consistently at that level. So, we've been regularly paying dividends. So I think we've done what we said.
I mean, Piet Viljoen is a very august and seasoned investor, and he thinks you're also incredibly undervalued. You put out a note recently. So it's for those participants on this investor conference, it's worth trying to find that note. But Steve, isn't it incredibly frustrating where you believe that you have a certain view of what your company is worth, where it should trade on the market, and it just doesn't get there? It's sort of, it makes why you bother with being listed at all.
Yeah, first of all, I enjoy being listed, and I've got a strong obligation to our shareholders. They believed in me, they believed in Balwin, they believed in our management. The management is still there, I'm still here, we're not going anywhere. Yeah, it is a bit frustrating, but I'm going to buy more shares. I want to creep up a few more percent to probably to 40% in our family. And yeah, I think I'm not into the short haul. We've got a pipeline of 65,000 apartments. That's a 15-20 year pipeline. So this business was never set up to be a short term. And I think and also another reflection is the amount of people that we partner with. I mean, EasyEquities and EasyProperties, we absolutely love EasyProperties. Andrew's a hell of a guy. We've done a lot of business with them. We love the way they do business, the way they conduct themselves. I think it's a phenomenal, I've said this before in the press, it's a phenomenal way of breaking the legacy of apartheid by what I call fractional ownership of apartments through EasyProperties. I'm sure they'll define it better than that, but I think it's fantastic. So we're seeing a lot of people wanting to partner up with us. So I think just be patient, the share price will come.
Can I ask Steve, I mean, for people who want to understand, we have like a lot of people interested in investing. What are your thoughts on the wider property market beyond just residential? Because I mean, certainly offices have taken a beating in the last couple of months, and I don't know if that's going to get much better. But you're close to the wider property sector. I mean, what are your thoughts about investing in the wider the wider property sector, I suppose?
Look, as an asset class, property is fantastic. It's our entire family. All the people that I do business with are all in property. I think the industrial space is absolutely unbelievably hot at the moment. I think it's great. And there's also some guys doing some fantastic work in that space. Schools, a little bit overtraded. I think there's a massive demand for between 3,000 and 4,000 Rand a month for education in this country. I think the schools got a bit heated, charging the amounts they do. Offices, I honestly believe, guys, I think the office space, I really feel sorry for them. They're great players. This is going to come back. Already there's lots and lots of stories of people hating working from home, not enjoying it, not being productive. Guys, COVID has to come to an end. Sorry, I hate working from home. I love my wife to bits. I love my dogs. Don't think it's a great productive place to work. I'd much rather have my PA and all my partners around me. So I think the office market will come back. I think the silliness of working from home is going to be over.
You won't tell your wife or your dogs about that. It's fine.
Yeah, a lot of people clearly don't want to be stranded on a desert island. But Steve, you are clearly passionate about property. It's your blood. Yeah. It's your. But there is also an argument out there, and one of our contributors, instead of buy to let, they call it buy toilet. The whole notion of buying a residential property to rent out on the basis that you're going to get a decent yield and you have an asset at the end of it when you own it and the bank doesn't always work. If you've got rising municipal rates and taxes, you've got a weak macroeconomic situation, the yields that you get as an investor in residential property can be really quite poor. And I know this because I've just sold a townhouse because the yields I was getting were horrible. How do you counter the cynicism, or is there a different way to invest in residential property? In other words, rather than buying an apartment yourself to a buy-to-let, it's better to go through a listed vehicle.
Yeah, look, that's a brilliant question, and thank you for it. I get asked that question 3-4 times a day. So for a person that isn't going to invest in large scale, in other words, somebody that isn't going to buy 3 or 4 apartments, EasyEquities is phenomenal, absolutely phenomenal. No hassle, arm's length, off we go. We've just done a deal with them on Kikuyu, which is nearly closing, which is a phenomenal investment because we've linked a bridge across to Manyaka, so all the Kikuyu residents get the luxury of, you can see the lagoon behind me on my screen, which is our one in Pretoria. So Manyaka, we're doing an even better one. So all the Kikuyu residents get it. So for a smaller investor, EasyEquities is the way to go. If you're going to go large scale and build up a portfolio of either 5 or 6 or up to 10 apartments, please buy at the beginning from a reputable developer. You've got to buy right in the beginning from a reputable developer and ride the wave of the improvement in value. If you do that, you've got a great chance. And I can prove it to you. I've done it. I run a large portfolio through our family. If you buy in the beginning from a good developer that does good quality and the development's good, then you will do well.
When you say buy from the beginning, is that specifically because you don't pay transfer duties? And that's
well, you don't. Yeah, you don't pay the whole way through the development. You don't pay transfer duty, but in the beginning, we generally have a slight discount on the apartments up front. So as money over time, we put the prices up as the development goes. So you've got a very good chance if you bought in the beginning.
Steve, can I just ask a question? That's one of the issues with Balwin Properties at the moment is a BE deal that you're in the process of signing, and it seems a lot of people and a couple of Balwin investors are really unhappy about this. And they're unhappy because it looks as if it's a vendor finance deal. In other words, you're helping finance the bringing in of a shareholder to take a 10% stake in your company. They say it's dilutive to existing shareholders because your shares are trading at sort of depressed levels. And they're really unhappy about this, especially as you're not getting a 25% plus equity partner. You're only getting a 10% equity partner, and basically existing shareholders are going to have to sign away, say 10% of their dividends for the foreseeable future, or for eternity, really. Can you address those concerns? Because I think it's one of the things keeping people away from Balwin.
Okay, first of all, there's only one or two that are not happy. We've canvassed the majority of our big shareholders. Okay, they've given me their full support, so bring it on. The second thing is I own 36% of Balwin. So let that just think about that for a minute. Why would I chop my nose off to spite my face? You know, I told people, and I was clear, when we listed this business, that we would do a BE deal. We were crystal clear. And if you think you can trade in this country without a BE deal, then go to Australia. Sorry. It took me 5 hard years, and the people that know me well, when I say that, it's not casual. I spent 5 hard years finding a partner, working unsuccessfully, canceled a lot of deals. We finally did the deal with Gerrie Fourie, who is somebody that I can work with and have worked with. He's got a master's degree in town planning. He's a qualified architect. He's a bright property entrepreneur. He's a great guy. And what everybody forgets, the majority of these BE deals are financed through one of the big financial banks, I'm not going to mention names. And then when it all goes south or explodes, then you've got this big ugly bank all over everybody because they've borrowed themselves to the hilt. We were clear on that. Gerrie Fourie, if you can read it in the circulars, put in 20 million of his own hard cash. We were clear on that. We wanted him to have some skin in the game. Then we vended it on purpose. We vendor financed it over 10 years with a 10-year lock-in to make sure that if something happened, we got the shares back. So it was a very, very well-crafted deal that Gerrie was happy with. And already myself and Gerrie, you know, we've done a lot of business with Gerrie. Reggie's fantastic. He's adding value. And the slight dilution, out of all the shareholders, I dilute the most. The slight dilution is going to pale if we get it right. And yes, it always is a bit of a gamble. I mean, like a marriage, a partnership takes time. I have to nurture it. I have to work with Gerrie. But we know one another. I've known Gerrie for 5 years because I've been involved in Waterfall, and he's been a fantastic partner, or colleague, sorry, he's becoming a partner now.
As long as, I suppose, like the wife, you don't have to work at home with Gerrie, it'll be fine.
No, Gerrie doesn't like working from home either.
No, I hope she's not watching. In terms of your sort of experience as an investor and the way you got into it, I mean, what are you kind of the lessons you've learned, the kind of the hard lessons you've learned about investing in property? I mean, you've obviously learned a lot along the way, but, you know, say your top 2 or 3 that our particular audience could learn from and internalize, and hopefully don't have to go through the same school of hard knocks.
Yeah, I think the most important thing is don't be scared to partner up. You know, I've been exceptionally blessed with phenomenal partners. I've diluted my business every time with partnership. My first partner was Mr. Rodney Gray, a fantastic Scotsman. He's been my friend for 26 years and still very involved. Then Ulrike Schneider, and on it goes, right through to Jonathan Bear, and finally through the public listing. Make sure you choose the right partners. That's absolutely critical. Watch your debt. As Mr. Bear wisely always says, please keep a very close eye. And one of our board members and all our board, keep a close eye on your debt and make sure your cash flow doesn't give you sleepless nights. And then for Balwin, what we're on a massive drive for now is zero defect. We want to improve and improve and improve. We're on the stock exchange as BWN, and I always say that's damn close to BMW, guys. Let's try and get our product absolutely perfect.
Steve, we're going to wrap it up there. Thank you very much for your time this morning. It's been fantastic talking to you. You've been very open about your business, about your experience in the markets, and we've enjoyed chatting to you. I suppose you can now unmute yourself and get driving again.
Thank you very much. Sorry about, apologize for that in the beginning, and thank you for hosting me. It was an absolute pleasure. Thank you.
All right. We'll
Thanks a lot.
Cheers.
Thanks, guys. Thank you. Cheers. Bye. Bye.
So easy.
financial mail.
So easy, so easy. So easy, so easy. You make it easy. Check out the phone,
Sanbonan Dumelang, to all those people that have just joined us. Up next, we are taking it to the strongest community out there, and that's the FinTwit community. And we've got a force that's going to be talking to us about hosting spaces, about ETFs, getting into all the nitty-gritty about ETFs as well. And all the way from Ireland, it's my girl, Cay-Low. Hey, Cay-Low.
Hi, how are you?
I'm good. How are you?
I am well, thank you.
How are you feeling? You good? You sure?
Yeah, a little bit nervous, but I'm okay.
Now, we saw your tweet. You just need to relax. We're here. The same way you host the Twitter Spaces, killing it each time.
Yeah, thank you.
You do your thing all the time. So, Cay-Low, tell me, what was the first ever ETF you bought?
So I bought the Cetrix NASDAQ 100 ETF. That was the first ever ETF that I bought. And I think that was back in 2018.
Oh, okay. All right. And so you've been an ETF investor since 2018. Is that when you start your investment journey?
Yeah, but my investment journey began in 2017. So I started off with unit trust before I discovered EasyEquities. So at that time, I knew nothing about investment. And I had a chat with my boss at the time, and he introduced me to unit trust. And when I started doing my own research, I then discovered EasyEquities. And I felt like it was a match made in heaven. So I created an account with EasyEquities, and I took the advice that, as a first-time investor, you should consider investing in ETFs. So I started off with the ETFs, and that was the Cetrix NASDAQ 100 ETF.
Oh, nice. I really like that you like the Cetrix NASDAQ, because I'm an investor in the NASDAQ as well. So my next question to you is, out of the top 5 most bought ETFs on EasyEquities, and number 1 would be the Cetrix MSCI, number 2 would be the Signia in Fourth Industrial Revolution, and then number 3 would be the Cetrix 40, number 4 would be the Cetrix NASDAQ, which you currently hold, and then last place would be the Cetrix S&P 500. Of those 5, which one would you say is your favorite?
Unfortunately, none of them, actually. My favorite is not on the list. So my favorite is the Cetrix Divi Plus, which is a Cetrix Dividend Plus ETF. So it's basically focused on companies that are expected to pay the best dividends in the forthcoming years. So that's my favorite one, and it's focused on South African companies. It has, I think, about 40 or 30 companies in it. And that's my favorite at the moment. So my favorite is not part of the top 5. I don't know why that's the case. I guess people don't like dividends that much.
I know you love dividends. Every single time a dividend payout happens, you are there tweeting, hey guys, just got a dividend,
Yeah.
Do you think that everyone should be a dividend-focused investor? Should that dividends be part of your strategy?
No, not really. I mean, there are different investment strategies out there, and I think it's just a matter of choosing the one that works for you. And dividends don't always work for everybody. But I am a big fan of dividends, but basically I'm more focused on ETFs more than just dividends itself. So there are different investment strategies. You just have to choose the one that works for you. And if dividends is not the one that works for you, then that's okay. You can just choose to focus on growth stocks or value stocks, whichever one that works for you. Or you can just have a mixture of everything. I have a mixture of dividend stocks and growth stocks and stocks that don't even pay dividends. It's all about just discovering and trying to find one strategy that works for you.
Yeah, I like the fact that you mentioned finding, discovering, and choosing an ETF might be tricky. Tell us how you go through choosing an ETF that fits your risk profile.
So the best possible way that I do it is by using the Easy ETF Finder website or the tool that EasyEquities have. It's a very amazing tool. So I start by looking at what kind of industry do I want to focus on and what kind of asset class do I want to focus on. So once I have that narrowed down, it makes it easy for me to then filter through all the over 80 ETFs that are listed on the Johannesburg Stock Exchange. And outside of that, I also look at the region as well. So I have ETFs that are focused on the South African Stock Exchange, and there's ETFs that are focused on the US market and the China market and so forth. So it's a matter of trying to figure out which region do you want to focus on? Do you want a combination of all these different regions, or do you want just to focus on one region, and which asset class do you want to focus on as well? And your risk appetite as well. And the Easy ETF Finder has an option where you can filter out all these ETFs based on your risk appetite. And you can also filter out based on whether you want to just focus on ETFs that pay dividends or not. And so I go through that whole process to try and make sure that I also sort of like diversify my portfolio. So I have ETFs that are focused on just the South African side. I have ETFs that are focused on the US market, like the Nasdaq 100, for instance. Then I have the total world ETF that's focused on like literally the whole world. And I go through, you know, it's just the process of trying to figure out which ETFs do I want to focus on, and what's literally the objective behind all these different ETFs, and how do I stand to benefit from the different ETFs.
Lovely, lovely. You mentioned a beautiful word there called diversification. And I've seen you on Twitter talking about diversified and diversification. Let's talk about that fight. What's diversified and what's diversification?
So diversification basically is a way of making sure that you're invested in different asset classes or different sectors to make sure that you minimize your risk and sort of like increase your rewards. Meanwhile, diversification is a matter of being over diversified. So you literally just invest in the same sectors or invest in the same asset classes. And that obviously increases your risk, because should that sector go through a process where they are not performing really well, it means your whole portfolio is going to be going down. It's going to be in red. And so I try to make sure that my portfolio is as diversified as possible. And the way that I go about it is by investing in different asset classes and investing in different regions. So instead of just focusing on the South African side, I then choose to focus on the other side as well. So I would choose ETFs that are focused on the South African side and ETFs that are focused on the US side and, you know, the whole world, to try and be as diversified as possible. But outside of that, I also choose to like focus on different sectors. So I have ETFs that are focused on the mining sectors. I have ETFs that are focused on the tech sectors, to try and diversify in terms of, you know, sector specific.
Wow, Kelezi, you are dropping bars. Like, you are literally, you should get a mixtape when it comes to ETFs. Honestly, because it's baby, and you are killing it. Like, even the response in the chat is going crazy. Like, people love you out there, you know?
Thank you.
Really amazing. And, you know, when I love looking at the data on ETFs as well as the EasyEquities platform in general. Yeah. And when I last looked at it, we just had over 148,000 odd ETF investors. And close to 30% of those investors are female. What would you say to that, the other unconverted 70% females on the platform that aren't investing in ETFs? So if they came to you and said, Keleto, why should I invest in ETFs? What would you say to them?
I think one main thing is the fact that there is this investment expert behind each and every ETF who has done the research for you. So you don't have to worry about going out there and trying to do research on all these different individual companies. So that's the first thing. That is the easiest thing ever, because somebody has done research on those ETFs, and all you have to do is just read the fact sheet and try and just gather as much information as you can, you know, from a fact sheet that's like literally 2 pages long. And there's also the fact that it's very, very low risk. And it's a good way to basically maximize your tax-free savings account as well. I think most of us do know about the tax-free savings account, and you're allowed to invest in ETFs in your tax-free savings account. So if you are somebody who is trying to maximize your tax-free savings account and take advantage of just the tax-free option that we have in South Africa, then, you know, ETFs are just a no-brainer. So it's a good way to get started. It's a good way to also just diversify your portfolio instead of just focusing on individual stocks.
Great. And you know, you talk about getting started, you know, and yeah. I want to ask you, why did you get started? What's your why in terms of investing?
Ah, that's such a good question. But my why was really, really inspired by my journey. The reason why I started investing was because of my own upbringing and my own childhood experiences as well, and my varsity experience. So just to put it into perspective, I was raised by a single mother with a very, very huge help from my loving and amazing grandparents. And I am the firstborn in my family. So I have 2 siblings who come after me. And so my varsity experience really, really shaped my investment journey. And I'm saying that because I passed my matric with great results, and I was very optimistic, very excited to start my varsity journey. And little did I know that excitement was really going to be short-lived. So I had applied to a number of universities and managed to secure a place in all of them, and decided to go with Wits University. And at that time, Wits had what they called an entrance scholarship, which was awarded to students who had passed, who had gotten like about 4 or more distinctions in their matric, and I was one of them. And I had applied for NSFAS as well, and about 10 or more bursaries. But unfortunately, my applications were very unsuccessful. And my mom is a minimum wage salary earner, but she has a very great financial mindset and a very big advocate for savings and stokvels. So she was also part of like the MTN's Cay-Low Mbedzi scheme. And she did all of that in, trying to prepare for my varsity journey, and, the cost she had anticipated she would have to cover in terms of my varsity experience. And she did not know she was actually in for the shock of her life. So eventually NSFAS rejected my application because of application errors or something along those lines. And Wits sent us the fee statements around Feb or March, and that's when the shock started. I remember my mom dig deep into her pockets, deep into her savings and stokvels, and only to realize that, there was no way she was going to be able to cover all these fees. And that's when the shock of her life started. And eventually we then decided that I'm going to deregister from Wits, because there was no way we were going to be able to cover all these fees. We tried to get loans, knocked on all these different financial institutions to get a loan, and with no luck. And eventually we then agreed that I'm going to deregister and move back home to give my mom a bit, a year to sort of be a bit more prepared for the next year. And when I went to deregister, the lady who was helping me to fill in the form and everything, she asked for the story, why I'm deregistering, and I told her. And she said, no, she checked my results on the system, and she was like, no, it's not going to work. I'm going to talk to NSFAS and find out what went wrong. But I had lost hope at that time. I was just like, I'm out of here. Nothing is going to happen. But to God, being God, I received a call from NSFAS, and the next day to come sign the NSFAS agreement, and I moved into student accommodation. So I did eventually make it back to Wits and managed to complete my degree in record time, thanks to God. And so all that experience, seeing my mom as prepared as she thought she was for my varsity experience, seeing her go through a process where she had to really dig deep into her pockets to try and make ends meet for me, that's when I realized that I need to do something about it. So when I became a taxpayer, I took it upon myself to make sure that not only am I going to invest for myself, but I'm going to invest for my siblings as well, so that they don't have to go through the same process that I went through, So it was a tragic experience. It was very, very, it was not a nice experience. So I did not want my own siblings to go through that. And so I then started creating my own account. That's when I started, creating my own account with EasyEquities. And eventually I created an account for my siblings as well, and invest in ETFs for them as well. And so I think had it not been for my university experience and having gone through all of that, I wouldn't have been somebody who wanted to do better and know how to better manage my money and how to be, just financially savvy and stuff like that. So all that experience really shaped who I am. And also just the fact that my mom was a big saver as well. And she, seeing her go through a process where she was just trying to make ends meet and she was failing at it. So I just wanted to do better for my family and for myself. So that's why I started.
Wow, your why is so inspiring. It's the emotional side of it is it's amazing. Okay, your journey through life has been something else. And looking at the comments, everyone's just saying, wow, a queen. Yes, girl, get it. I love it. And from the Easy team, I've spoken to Bonolo, I've spoken to Standwa, I've spoken to Cay-Low, I've spoken to Carly. And the brand team has decided that we're going to give you 5,000 Rand into your EasyEquities account.
Thank you.
Story and what you do for us on the daily. Like you create every single time there's a new ETF. When there's an EMAG, you're there. Oh yeah, always EMAG. You know, and we're so inspired by you, and I know you inspire a lot of people. So keep doing the work that you're doing. I think that's all we have time for, and you've spoken so much, and I'm glad you joined us all the way from Ireland. Hope we can continue this conversation again. Apparently there's a investor conference after party. Really invite you. So I will see you at the after party, and thank you so much.
Thank you very much. Thank you.
So easy, so easy. So easy, so easy. You make it easy. Check out the formula, baby. So easy, so easy. So easy, so easy.
Hey guys, don't feel bad. At the end of the day, we do have a lucky draw running on Twitter. So all you have to do to win is the hashtag investor conference and hashtag EasyEquities and you could win. And if you win now we've called in the big dogs from Financial Mail, who's going to tell us all about that beautiful hashtag DYOR. That's do your own research. And we're calling up Rob Rose from Financial Mail up next.
So easy, so easy. So easy, so easy. You make it easy. Check out the formula, baby. So easy, so easy. So easy, so easy. You make it easy. Check out the formula, baby. So easy, so easy. So easy, so easy. You make it easy. Check out the formula, baby.
Welcome, guys. Thanks for joining us. We're going to do a discussion about doing research and why it's important. As you guys know, it's a fundamental part of before you invest in any stock, is to find out what the fundamentals are, find out whether you should or not, and get to know the company. I've seen so many people in my sort of 20 years or so as a financial journalist get tripped up because they haven't bothered to find out what the company even does, never mind who's in it. And it's simply bought on a name, or because their mate at a braai has bought, this share or that share, and it's ended very badly. So I prepared basic slides about things to do, things not to do, and stuff I've learned over my career as a business journalist. So I suppose the issue is, the value of research, when to strike and when to run. And I have my colleague Julieta, who's going to ask smart questions, as she always does. She's far smarter than me. So now essentially, what I will talk about is, the basics. It's essentially about whether you're trying to find out if the share you're buying today, you're going to get more value tomorrow, essentially. The future performance, the future profit, is that priced into what you're buying today? We look for companies that are not fairly priced by the market, so you expect it to go up at some stage, and you're looking for those inefficiencies to see where they happen. There's basic stuff you do. You can look at various ratios. People talk a lot about price equity ratios, which, as you know, is the relationship between the profit of a company and the share price, to see if it's undervalued compared to other companies doing similar things. And there's other ratios that I think are pretty useful too. There's a PEG ratio, which I think is fascinating, which is basically the price to equity, your price earnings against your growth, the growth of the company. So there are all these things you can look at to help you in the company to understand whether it's good value or not. But ultimately, it's about deciding whether, getting to know it, deciding whether you think that there's a good long-term prospects.
Rob, you say all the interesting stuff happens when the market gets it wrong. And that's when you talk about a mispriced company, right?
Yeah.
So if you're looking for an example of when the market got it wrong, or maybe the caveat is retrospectively could argue that at that point in time, they were correct in their assessment, and that is the PGM companies, the platinum companies like Anglo American Platinum, Impala Platinum, Northam, RB Platinum. And there were some dedicated value investors, like we mentioned Pitfall earlier, guys I've spoken to on my shows before, who said these things are fundamentally undervalued. The PGM market is going to change. There's going to be a deficit of palladium. It's going to push the price up. Not enough suppliers coming onto the market. And everyone said, no, these things are rubbish. And to some extent, they were rubbish. You know, they had big debts. I mean, we're talking about Lonmin before it got bought out by Sibanye-Stillwater. The prices of these companies traded at incredible lows. And that was when you needed to buy them. That was when pessimism ran riot for the PGM stocks. But if you'd bought them there and if you'd stuck to your guns, and maybe there's a certain sort of bloody-minded belief, as much as an analysis of the financials, you would be smiling today if you'd hung on to the shares over, what, a 4-year period.
So, I mean, I think that goes to, I've got a slide at the end about investment cliches and how they're, you know, you grimace when you read them, but they do tell you something about it. And one of Warren Buffett's ones was, you know, be bold when others are fearful. And that illustrates the PGM example. If we have a look on the slides, I mean, I basically talked about platinum stocks. You know, platinum stocks, Impala Platinum, it was 15 Rand 91 in August 2018. It's now up 1,320%. So had you bought at the bottom, and nobody ever does buy at the bottom, and you shouldn't buy at the bottom necessarily because you don't know if it is, but had you had the insight to do that, you'd be up 1,320%. So the issue is, it's not so much necessarily whether you buy at the bottom and timing it. It's about finding these sectors where they're completely out of favor and you can do well if you get it at a certain stage. I think construction is probably like that right now. That's why there's been such a run on Avenge stock, on Avenge as a stock. And I think perhaps to some extent the hospitality shares are another one at the moment, you know, the Toho Sons and those guys, where they're completely out of favor and the fundamentals look terrible, but at some stage people are going to go back to hotels. So as long as they survive through this and they're well placed for it and the fundamentals are still in place, I think you can do pretty well if you get in at this sort of stage.
But the fundamentals also include debts, and you've got their high debts, Aspen, Glencore, Anglo American. I mean, Anglo American had to contemplate selling off some of its most valuable assets, like its stake in Kumba Iron Ore, because it had too much debt on its balance sheet. So, but maybe what's a little bit tricky for investors to know, with the benefit of hindsight, you can say Anglo American was never going to fail. It was never going to be completely swamped by its debt. But there are times when companies they are killed by the level of debt that they have on their books. And so maybe there is an element of risk or just taking a chance on whether a company is going to survive its debt.
I know so many people who thought when African Bank plunged from 60 Rand to 15 Rand, 15 Rand for African Bank, what a deal. You know, it can never get worse than this. And then it did. The company crashed and went into curatorship. And that's what can happen, is it can completely bomb out. But the point is, for something like Nedbank, which in 2004 hit 45 Rand, you know it's going to recover. Same with Anglo American and Glencore. You know that they're pretty well managed companies and all. They'll reduce their debts and they'll come out of this. And that's what happened. If you'd invested in Glencore and Anglo American 3-4 years ago, you'd be smiling now. Anglo American is what, over 500 Rand? It's doing supremely well. So I think that's an instance where you can find a stock that's out of favor at that particular time and get in at that sort of time. You know, before I get to these, I keep pressing the button, which I shouldn't, which is not smart. But, you know, you look at a case like Sasol, for example, that's gone up massively in the last year, 925% since the bottom of the COVID crash. You know, they had a big investment that went wrong. Lake Charles, they invested in Louisiana in America. And that's a case where people thought, well, this investment might kill the company. But sentiment was terrible for Sasol for a long time. The share price went down to, I think, 15 or 18 Rand. And at the same time, the oil price crashed. And you know the fundamentals of the oil price, if you look at that and do enough research, you would say the bet is that the oil price is going to recover from its COVID lows. So that's probably a good time to get into it. And at the same time, Sasol had its own internal company issues, the Lake Charles investment, and it was going to, with new management, find a way past that because it had a strong board. So I think at 18 Rand or so, it was a great investment. Now it's 225 Rand or so, up 925% in a year. So that's a case where you look at it at the bottom and you think that's something where you can do well. And I think a lot of people did make a lot of money out of Sasol.
Yeah, the big question for them is what now? And we ran an article recently saying it's not going back to 500 Rand. And I'm sure someone in 10 years' time, when it does hit 500 Rand, is going to say you got it wrong. But we argued that the fundamentals, and if you look at the structure of the company, the assets that it has on its books have changed from when it bought into Lake Charles. It's a smaller company. Therefore, it's going to make less money. It has fewer options until, I guess, it's got enough of a war chest to maybe go out and buy other companies. And, you know, that's why going through what a company has on its books, its assets, is also a very helpful way of informing you as to the company's likely prospects.
Sure, and as an investor, you can say it's not going back to 500 Rand, but you know that it's probably going to go back to 200, 300 Rand. From, say, you know, if you buy into a company like that at 30 Rand a share, you're going to make 10 times you might not make 20 times, but you'll make 10 times what you put in. So it's that cliche about, you know, value is what you get and price is what you pay. There's a difference between the two, and that's the difference here. The last one there is, you know, I talked about ArcelorMittal, the steel company. Steel's had a terrible time for the past couple of months, past couple of years. But had you got into ArcelorMittal at a time when the steel industry was under a crushing pressure, you would have made 1,617% year-on-year gain. It's an illustration of how if you choose the sectors that are unloved at a particular time, you can do pretty well in the end.
Yeah, but there's also an element of luck, because I'm not sure if I would have put my money in
30% luck. Well, okay, that's my case. I think smarter people, obviously, there's less luck involved. I also talked about reasons when companies are overvalued, and I think it's also important not to go into companies where there are big issues. You can underrate the risks that happen. And I think, speaking to Steve Brookes from Balwin now, you know, CEOs are often paid to be very bold and optimistic about their company's prospects, and they're always going to talk up the stock's prospects. But I think as an investor, you have to be a bit more skeptical, a bit more aloof, and take a more independent view and say, these are the things happening to the company that the CEO won't necessarily tell me. So I think Naspers has been a case where, you know, the Chinese government has cracked down on the big tech giants, has sought to intervene, and there's a lot of regulatory risk which has intervened in that company. And we've seen what's happened over the past couple of months. Tencent, which is this massively fantastic investment in China, it's down 33% in the last 6 months. And you've seen the pressure on Naspers and Prosus, the two JSE-listed companies, on which there's massive trading volumes on EasyEquities. And I think that's a case where people have thought, well, China's just going to keep going upwards. There's no check on it, without realizing that the Chinese government, as a regulatory regime, are very interventionist. And they were always going to look askance at a company making this amount of money in what is supposed a country notionally run by a communist party, even though it's not really.
You also talk about Tesla and Zoom, hype stocks. I mean, well, you could argue that Tencent, the hype was reflected in its PE ratios. Tesla certainly has an astounding PE ratio, and the bears, and there are firms who maintain their short positions in Tesla, they've been badly burnt, who just say there's too much hype in the stock. The earnings are never going to catch up with the share price. And that's really, you know, when you look at PE ratios or PEG ratios, that's why you need to bear those take those into account.
Absolutely. So something that I wrote on quite a lot was Steinhoff, and Steinhoff was a case where there was lots of discussion in the market about what could go wrong. There was an investigation in Germany, but they listened to the board, they listened to Christo Visser, they listened to Markus Jooste, saying nothing's wrong, it's all fine, ignore the stuff out of Germany. And had you done that, your share price would have been down 80%. You think that there's nothing in the bad news because the CEO and the chairman says, oh, well, it's all just, you know, don't believe a word of it. And in that case, you would have been dramatically poorer for that kind of thing. So the issue is know the market well, do your research. Woolworths, for example, they went into Australia, they bought this big department store chain, David Jones. department stores weren't a great thing at the time. I mean, and the prospects for department stores have worsened, not just because of COVID. So I think you would have known Woolworths is going to face some kind of a crunch at some stage.
But there again, you had the CEO talking it up. It was the
Of
CEO's
course,
deal.
yeah.
I mean, and I suppose you have to back yourself. And sometimes it works and sometimes it doesn't. And Ian Moore at the time said, this is a good deal. It's going to create a Southern Hemisphere champion. And it backfired spectacularly on him to the extent that he lost his job, ultimately. But if you had believed in him, you would have said, no, okay, Ian's right. But he wasn't.
Yeah, absolutely. So, you know, there was a great journalist I know called Dion Basson who had a matrix of things that can go wrong and why you shouldn't invest in specific companies. And if I can get this to work, I'll show you what he told me. But he talked about the autocratic CEO, steer away from companies where the CEO controls everything. That was a case of point with Steinhoff. Selling a fairy tale, you know, your cash flows are completely different to your profits. A company called Blue Financial crashed, having a similar thing like that. Too much paper activity, and I think a resignation of your staff and auditors. You often see these resignation announcements, you know, the guy resigned with immediate effect. Nobody has to garden that badly immediately. There's always a story there and there's a problem.
Yeah, because they always go and garden.
Yeah, exactly. Right? I have to go garden immediately. I suddenly realized this morning when I woke up, and that's never going to work out too well. Terrible disclosure and transparency. I think you look at crypto assets, there was this company, Mirror Trading International, where they basically said they had this proprietary trading platform where we can make money on cryptos, trading them, but we're not going to tell you what's on our platform. And it shocked everyone, of course, to find out it was a big scam and it collapsed. So that kind of thing, I think, is a big warning sign. And weird control structures where the CEO makes sure that he controls things, or a group of insiders like that. So fundamentally, you know, like I said, investment cliches are what they are, but you know, some of them are worth bearing in mind, and you keep coming back to them, even though you'll tell none of your friends that you keep replaying it in your mind. Price is what you pay, value is what you get. That's one of the big ones. Don't be consistently stupid about investment. You know, no one can be intelligent the whole time, but try to minimize the moments of stupidity and complete brain loss. And I think the fundamental point about research is never invest in something you don't understand. So that's the point. Read everything you can, find out what you can, and ultimately it's your money you're putting into something. You're buying a part of this business. You're going to become part of that business's future. So treat it like that. Treat yourself like an owner.
Yeah, well, you are an owner. You are giving them your capital, and they've got to be stewards accordingly.
Exactly. So that's the quick 101 to keep within the short little time period I had.
And
Thanks
hand
very
back
much.
over to Kylie and Lesedi. Thanks.
So easy, so easy. So easy, so easy. You make it easy. Check out the formula, baby. So easy, so easy. So easy, so easy. So easy, so easy. So easy, so easy. You make it easy. Check out the formula, baby. So easy, so easy. So easy, so easy.
Guys, the investor conference is almost coming to an end. Can you even handle?
Yeah, it's been a great day. Morning.
Almost, yeah. Almost done. I'm almost ready to retire from it.
Oh, yeah?
Not yet. Not
Oh,
yet.
yeah?
So I think the next speaker that we're going to be bringing on is going to talk about a subject I'm personally super interested in, because I only really started thinking about my retirement like a couple of years ago, and I wish I'd started earlier. I don't know about you. Have you started thinking about retirement?
Yeah, like I mentioned, because of my background and what I studied, I knew I had to save for retirement.
What an overachiever.
Not an overachiever, but it's really hard because you have to budget. You need to make sure you choose the right product, you know. And I'm glad that we've got a specialist from EasyWell that's going to dissect it for us and make sure we retire in style?
Because I don't know about you, I'm going to be on a yacht, obviously.
Obviously.
Like sipping champagne and living my best life because I've already started my journey. I've got my retirement annuity working for me. I've got my tax-free savings account. I'm doing all the things. But I think you're right. Let's get the expert in the house, our Bongani from the Easy Wealth team, to talk to you guys about retirement.
Hello and good afternoon, everybody. I hope you can hear me. Just waiting for, oh, perfect, I'm live, all right, perfect. Good afternoon again, guys. Thank you so much for having me today. It's a complete and true honor to be able to be presenting today. Before I begin, I'd just like to congratulate all of today's speakers. You guys spoke really, really, really well. And to our MCs, of course, you guys stole the show again. Well done, well done. So without any further ado, let me continue on with my presentation. So basically, I'm here to speak to you guys about retirement. And before you start yawning and thinking this is something boring, just remember they saved the best for last. So that should mean something. But all jokes aside, let's get ready to see how easy we can make things for you and for your future. Traditionally speaking, when we talk about retirement savings, the following methods are what we use. What we refer to actually most commonly. That is the RA, the retirement annuity, the preservation accounts, that's your provident and your pension fund. We also have the tax-free savings account. We also do refer to property and any offshore investments that you have. I won't go into too much depth about each of them, but I will say the common theme amongst them all is that they're all geared for long-term investing. And if there's anything that I want you guys to take away from our presentation today, it is the concept of long-term investing. With that being said, the first three methods are much better suited for the long-term investor, as they have certain things in place that discourage withdrawals. What we've seen time and time again is what can only be described as a lack of discipline. What you find is that people are always dipping into their savings for any number of reasons. This could be to pay off debts, or school fees, or traveling, or to buy the latest iPhone, or whatever you may call it. And this is something that's not good at all for any number of reasons you need to understand. So when saving for your retirement, the idea is to put the money away and remove any thoughts that you have about accessing the funds until you have actually retired. The reality behind retirement is more than the fact that you won't be waking up and rushing into the office anymore. Retirement comes with a lot of changes. Some of them are harsh and some of them are not so harsh as well. The most noticeable change is that your salary will not be coming into your account anymore. And maybe in future, your hip may need a hip replacement, but that's a discussion for another day. But on a serious note, the real question here is, how do you keep up with your payments without an income? So you're no longer earning a salary, but you still have a medical aid to pay. You still have day-to-day expenses. You have to buy groceries. Do you cancel your medical aid? Do you look for a cheaper one? Do you stop buying groceries? Or do you ask your kids to cover this for you, if you have kids? But let's face it, guys, nobody wants to be in that situation. And poor financial planning will lead you down this road. So to help explain this a little bit further, I want to introduce you guys to someone. Meet Bob. Bob is a 28-year-old investor. He has no children, he's a stable job, and he's very single. The key points to take away from this is that he's young, he has an income, and he has no dependents. More about Bob is that Bob loves to have fun. He really likes to have a good time and go out with his friends, have dinner, have drinks, and he always finds himself paying for their drinks. Now, there's absolutely nothing wrong with having fun from time to time. However, the problem with Bob is that he seems to have his head in the cloud a little bit when it comes to his retirement or his future. He has not put any thought into his retirement at all, and he spends all of his income and cannot save anything at the end of the month. Bob is the kind of person who lives in the now and has no time to think about his future self in the next 20 years or 30 years or 40 years. Sadly, Bob's situation is merely part of a statistic in South Africa. According to a recent survey that was done, about 50% of South Africans do not have a retirement plan, as in they do not know when or how they're going to retire. looking deeper into that stat, only 1 in 12 people feel that they will have enough money to retire on. That's about 9%. So if I was to flip that around, 91% of people feel that they will not have enough money to retire on when it's time for them to actually retire. That's a pretty scary statistic, considering that we all have to retire eventually. So the real question here is, how do we change that number? Or rather, how do we inverse it? If you find yourself falling in line with that stat, you should be asking yourself these kind of questions. What do you want your retirement funds to do for you? Ideally speaking, you want to sustain the lifestyle you have, or you want to be able to travel, or you want to be able to afford whatever it is that you need to afford. That's the kind of question you need to ask yourself. The next question, with regards to how much is enough, you should be thinking more on a monthly basis than as a single lump sum figure. On a monthly basis, what do you need to get you by? What do you need to keep you paying all the bills and all the medical aids and everything that needs you to keep going on a monthly basis? The third question as to when to start, I think one of our panelists, Bright, actually mentioned this, and he said it in such a brilliant way. I feel like it's bad even trying to use my example, but I'll still use it anyway because it gets the point across clearly. The old saying, now is as good a time as any, holds true for this question. The longer you put it off, the harder it may be for you, and the further you take yourself away from your own retirement goal. So if you haven't already started, now is as good a time as any to start. And the last question, are your goals achievable, is definitely pretty self-explanatory. But you should not be setting a goal of 10 million Rand if you're starting as late as in your 50s and you're going to be retiring in the next 5 years. I know it's just a silly example. Some people can do it and some people can afford, but I am speaking to that statistic we spoke of earlier, where the 91% of people feel they will not have enough money to retire on. Now, to help explain my next point, I'd like to introduce you guys to another friend of mine. Meet Chuck. Chuck is 35 years old and he's a top-class chef. He started working at 25 and he knew then and there that he needed to put money away for his own retirement. So what Chuck has been doing is he's been saving for his retirement for the past 10 years at 500 Rand a month. Pretty smart guy, right? Let me show you something that's even better. What Chuck has decided to do is to take control of his own investments. As you can see, Chuck has downloaded the EasyEquities app there, and he's managed to save and put away quite a bit of money into his retirement funds. Not only is his money safe, it is also growing at an exponential rate as he's making profit. The idea behind this is to get you guys to quickly understand that saving your money under your bed or mattress, I know it's a poor example, but saving your money under your mattress will not guarantee you the same kind of growth and safety that Chuck is enjoying. On top of that, not only will Chuck be receiving monthly statements, Chuck is also able to see his investments whenever and wherever he wants. He has taken comfort knowing that he has full control of his investments until he retires. So what I want to leave you guys with in closing is what you can expect from a proper retirement plan is, upon your retirement, 1/3 lump sum payment of the money that you've saved will be paid out to you. So that is, when you retire, you will receive 1/3 of the money that you have saved in your bank account for you to handle your affairs or to do whatever needs to be done. The remaining money, 2/3, will need to be reinvested, and this will be reinvested in order to secure your long-term income for your retirement. What this basically means is that you guys will be paying yourself a monthly income. How cool is that, hey? So basically, to protect you and the funds, you cannot touch them at all, no matter your age or your circumstances. This is how you retire in style, ladies and gentlemen, through proper planning and preparation. But to our investors out there, I want to leave you with this. If you haven't already started planning or saving for your retirement, I urge you to take the first step. Take the smallest step you can. Soon you will realize that this is a marathon and not a sprint. Later, you will realize that all those small steps actually took you to the top of a mountain that seemed unclimbable all those many years ago. A little goes a long way. I guarantee you that the view from the top is much better than the view from below. Now, obviously, I've simplified this presentation quite a bit, but the idea is to get you guys to get ready to start pushing money towards your retirement as soon as possible. And it does not have to be million rand a month. It does not have to be 100,000 a month, you know, as little as you can. Just start the journey, begin doing it now before it becomes too late. The longer you take, the harder it becomes for you to get to whatever goal it is that you're trying to reach. And that brings me to the end of my presentation. I hope this was as informative for you as it was for everything else. Have a wonderful afternoon, ladies and gentlemen. Thanks for joining us.
So easy, so easy. So easy, so easy. You make it easy. Check out the formula, baby. So easy, so easy.
And that brings us to the end.
The end of the first ever investor conference.
I think it's been one for the books.
Definitely, without a doubt.
I mean, I know we're about to announce a massive prize winner, but before we do that, just to keep the suspense rolling, just make sure people are still listening. What were your highlights? What did you like the most?
Okay, I loved the first initial chat between Charles and Gerrie. That was.
You stole mine. Okay,
You
fine.
got the spotlight with Gerrie. I didn't get it. So that was, I love that. And then obviously I think actually before that, it's actually Cay-Low's talk.
You stole my second one.
No, man. Great minds think alike.
Great minds.
Yeah. So that was my highlight. What was yours?
I really actually enjoyed listening to Balwin, the Balwin chat. I've heard so much about their CEO and what a character he is, and I think that really came out. I also just loved what Bongani was saying now about retirement and the Financial Mail team. They brought it. They brought the education. Like, I'm going to do my research in a whole new way, I think.
Yeah, and I literally, now that you bring up Financial Mail, they just told me that they've got a giveaway that's happening that we're going to be emailing to all the participants that joined us today. So apparently there's a watch that costs about 40,000 Rand up for grabs.
Oh, that's like more than my whole portfolio right now. That sounds amazing. That sounds incredible.
Super amazing. So watch out for our email. You'll get an email sometime this week telling you all about the fantastic competition that Financial Mail is running for all the participants this afternoon.
But the real prize, guys, the real prize is the amazing content that these guys are putting out all the time. If you're serious about your investments, you got to keep your finger on the pulse, man. And that's what this team are doing. So make sure you're following them on Twitter. If you're not, go and check out the different subscription deals that we'll put in the link that we're going to send you, and stay in the know. You've seen they've got all the smarts, and that's what you need to be doing in your investment journey, for sure.
No, without a doubt. Do you use Financial Mail?
Of course. Hello.
Okay, I'm testing.
Every day.
Love it. So guys, there's a lot of content out there. Thank you so much for joining us. We've told you about Easy Academy, Easy Learn, Easy Does It podcast. We've got a research portal. It just keeps coming. We're giving you the content so you can make your informed investment decisions.
Whether you like reading, or you like listening, or you like watching, or you like short form content. I mean, we're also posting like the top 5 community stock picks on our Instagram. So guys, whatever your flavor is, there's something there for you. There's a little nibble for you.
I actually have a question for you. Have you been converted into an EasyCrypto fan now?
I'm a little bit converted. Actually, after Rob was saying, I mean, it made so much sense that the best cryptos will always be in that EasyCrypto bundle. Like, it's a no-brainer. I can't really, fault it. So for me, I'm probably going to stick to my 3% rule, 3% of my portfolio in crypto. But that being said, if it shoots the lights out, it's got the potential to, do amazing things for me. And if it doesn't, it's not too much.
No, there's no such thing as doesn't. We're being optimistic here, and we definitely shooting the lights out. So yeah, I'm glad that you converted, and I'm looking forward to speaking to you about crypto more. Even though you don't. Yeah.
I've got to up my knowledge.
So, and I didn't know that Carly was a semi-professional skateboarder, but...
I mean, you just obviously weren't cool enough at the time, because my name was out there.
Okay. But anyway, I'm going to tell the community about our competition that we had. You know that we're running a competition on Twitter. All you had to do was use the Investor Conference hashtag, as well as the EasyEquities hashtag, and tag us in the post. And right now, we're about to do the random draw.
Can I do a drum roll?
You can? Okay. Let me just... Are you ready? Now, go. And our winner is Zwanda_Nana.
Whoa, well done.
So shout out to you, girl. You just won yourself 5,000 Rand EasyEquities voucher coming your way. We will hit you up latest by Monday close of business. So don't worry, it's coming your way.
We want to also know exactly what you're going to invest that 5,000 Rand with. We're going to follow your journey. So please share it with us on Twitter. Thank you so much. Thanks for joining us. And we can't wait for the next one. And hey, if you saw something you liked in the conference, tell us, tweet about it, and tell us what you want to see next, because this is all about you.
Yeah, and don't forget the competition doesn't end here. We still got the financial mail competition coming up. So keep your eye on your
inbox.
That's the one. And Carly, I think
that's us.
That's us.
Bye, guys.
Bye, everyone.
So